We got some.
Hey, how you doing, Nandan?
Doing good, Howard. Hello, everyone. How's the audience doing? Hope you guys are doing good. Hope you guys had a good trading day so far. We had some interesting news coming out with non-farm payrolls, so hopefully you
We
guys got
certainly have.
good trades in there.
We we
um,
cer we certainly have. It was the number was a lot stronger than market expected. So the currency saw the dollar saw an initial kind of flip higher, which has since
yeah,
been mostly reversed, which is could be a good anti-news signal. So that's something that I'm already long on euro dollar from yesterday, and I'm looking to add in the very near future. Actually, I think if we break session high, should I just go to the chart?
yeah, absolutely.
Cool. Okay. Okay. Let's just show you what looks like is shaping up here. Okay. Okay. Well, I was kind of, I was going to say, lucky enough to buy some euros at 112, just below 112.80 yesterday, and saw a nice kind of move up from the Asian session lows, the late New York lows during the session. A bit of a pullback going into the non-farm payroll. It was stronger than expected, so we saw an initial kind of knee-jerk reaction lower on euro dollar, but that kind of held above 113, the round number so far, and since kind of bounced back to pretty much where the market was before the release, 113.33 4 odd. So basically, anyone who sold after the number came out, and now most of them are kind of underwater. If they react, anyone who reacted to the figure saw the bullish number for the dollar, bearish for euro dollar, sold it. Now they're sitting on a losing position. If they're day traders, they may get a bit twitchy and start to cover their short positions.
Yeah,
So yes, so it's essentially bullish on euro dollar for me. Just going back to the bigger picture. So we've had this. These are the weekly candles, by the way. So obviously we've had a very strong upward move in euro dollar over the last couple few months. More recently, we've had I guess 3.5 strong weeks where the market really blasted higher, got a little bit carried away. I suppose it's only natural after 3 very strong candles like this,
yeah,
and we saw a kind of bearish reversal week last time, and a little bit of follow through so far this week. Not a whole lot of follow through in my opinion. We've got a lot of broken resistance, which has turned to support on euro dollar. The previous swing high was 112.76, and a little bit lower down we've got 112.14, 15, 112.10, that kind of area. So there's a lot of support just below the market on the weekly chart in terms of broken resistance, which has now become support. So for me, that's the reason why I've been kind of like probing the long side, starting yesterday,
yeah,
just looking for this thing to basically be a kind of a small ABC correction, and just move on to the daily now. So we had kind of the swing high 115.74 or so, first leg down, the A leg, then a kind of B wave correction, and then we've seen this kind of marginal push to a new lows. We broke through the low of the A leg, if you want to call that an A, B, and a C, possibly. That's really what how I'm kind of viewing the whole thing. So I think this is a potentially complete bull market correction as at yesterday's low. So A, B, and C, and maybe with the impetus of this kind of, we've had a piece of supposedly bearish news with the non-farm payroll, which has not seen follow through to the downside, at least not yet. So that could be kind of a harbinger of a kind of a short squeeze or a rally going into the end of the day. So let's see how we shape up. As I say, I got in yesterday just below 112.80, and I'm going to add, if we can break above today's high, which comes in at 113.55, I believe. Just up here, 113.55. I'm going to be adding to my long position, and then obviously moving a stop. Probably I think I'm going to put my stop just below the today's pullback low after the non-farm payroll, because I don't really want to see
gotcha.
the market back through there that would be that for me would be negative, and we're going to see a new low. But it's shaping up quite nicely. I think we could see a big short squeeze on this one, because there's a lot of people that shorted the market on the headline news. That's often what happens, where you get a kind of a knee-jerk reaction. They see the number hit the screen, they buy dollars, they sell euros, and then the market
Yeah.
often,
Right.
usually it'll be down here usually, but when they realize that it's not, that's when they think, maybe something is not quite right about this position, and then push
Yeah.
comes to shove, and we find ourselves we find ourselves trading up here by the end of the day. Um, in my experience, no guarantees, obviously, but that's kind of what I'm
Right. Yeah.
expecting. Um, so yeah, so yeah, I'm so looking to add to my long position from 112.80 odd yesterday. If we can break 113.55, and then I'll be looking for a big acceleration higher. I'll hand it across to you for the time being, and then I'll come back to some of the other markets, if that's okay.
Yeah, of course. Yeah, I didn't really have a plan coming into today. I usually like to have a certain amount of pairs that I like to look at, before the main trading session of the day. But since we had non-farm payrolls, and since the market was, it's been a little weird this whole entire week, especially in the beginning of the week. It's just been chopped up and pretty much sideways, just due to the news, pending news. We had some Bank of Japan news, interest rate
Mhm.
news that came out. And the markets did go crazy with that. Yen definitely made some major moves, and if you caught that, man, good job. I was, unfortunately, I was asleep at that time. These moves happened in the Asian session, but today my plan coming into the market was just to see, what happens after non-farm payrolls. I wasn't really interested in trading
Yeah,
beforehand, just because the market
yeah,
usually consolidates. The entire market consolidates before these news announcements come out. So in terms of numbers of the actual news report, I didn't really, I never actually pay attention to what the numbers say. I just try
yeah,
to see, what is the market, how is it reacting to it? If the dollar is going to move up, I can see it on the charts. I don't need to understand what the numbers mean in
yeah,
that case. And
yeah.
the
I mean,
only thing I'm
it's
looking
not.
for,
Yeah,
y-
for me, it's nice to see a very strong number that surprises the market, because that's what they're reacting to.
yeah,
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 they see a much higher number than expected. Oh, I must buy dollars right here, right now,
right.
and that's what causes these kind of situations, which I think is shaping up right now on euro dollar. So let's see. We'll watch the space.
Yeah, yeah. Currently, I'm looking at well, I'm looking at the entire market. I just see a bunch of push and pull going on, a bunch of tug of war going on between currencies.
Mm,
Especially after the news, I was hoping one currency would take a dominant form of strength or weakness, but we've got some currencies that are weak. The Aussie dollar for this current main session, the Aussie dollar is strong. After the news, the dollar was, showing some weakness. Um, Currently, the pound is also showing some weakness. I just there's not enough consistency in terms of one currency taking that push and pull. One currency is not dominating everything, which is what you want to see when you have moves like in a choppy market. When you have a clear strength versus a clear weakness, then you get a really nice breakout point. But
yeah,
it's not nothing's really being dominant in terms of strength and weakness. There's a lot of tug of war going on, so I'm just sitting on my hands really right now. I honestly, I'm not even looking at a particular chart, which is why I'm not really sharing my screen right now. I'm just looking at how
mm,
is um, how is each currency doing, and then once I get a consistent reading of about 0.2% of the pair moving in the same direction in that same currency, every single currency moved in the same direction, um, then I'm more interested in looking at how the charts are forming up. But even right now, the charts kind of look weird. The pair that I am looking at, kind of, I'd say, is the Aussie dollar. For a
yeah.
buy to on the weekly time frame. If it's just at I guess I'll share my screen here.
It looks awesome. The breakout for me. I agree with you.
Yeah, yeah. All right. Hopefully you can see my screen now.
Yeah.
Yeah, so I'm honestly just monitoring the Aussie dollar, and I'm looking at all of the Aussie dollar pairs. Let me make this a little clearer for you guys to see. But I might enter into a buy position, just depending on how these pairs move. I like to see all the Aussie dollar pairs moving at the same time. So if I move into the 5 minute chart, all these Aussie dollar pairs seem to be reversing a little bit, and so the Aussie against the U.S. dollar will. Now I'm going to check the U.S. dollar pairs. Let's make this a little clear for you guys to see. Um, it seems the dollar is the one to drive these movements. It seems like the intraday momentum is showing the dollar is starting to show weakness. That's something I really do like. So there is some consistency in dollar weakness and Aussie dollar strength. So if this pair does continue to move up, I'm certainly interested in a buy. I just haven't pulled the trigger yet. But man, looking at this larger chart, this weekly time frame chart, we're at a critical point. There is a fresh weekly cross to the upside, so I'm just waiting for my price alert to get hit, and then I'll probably enter into a buy. And then ultimately, we got room to move until this 0.687 area. I honestly think we can take this whole move back. Will it do that? I don't know, but there's certainly potential to move back all the way up here. What you have to do is when you get into these long-term position style or swing style to position style trades, you have to monitor how the lower time frames are moving in conjunction with the larger time frames. So obviously we have a trend in place, but if we move up 100 pips today, let's say, right? If we move up 100 pips, well, I got my stop to break even. At that point, I'm playing with the house's money, but now I'm going to be looking at the 4 hour time frames. How is the 4 hour moving and how is the 1 hour moving? If Well, there you go. Price alert just hit.
That's me.
I am going to go in with a position right now. Well,
Yeah,
actually, let's see.
yeah. Just when I'm adding to my euro right now as well. So we're both selling dollars right here.
Yeah, and my stop loss is going to go behind this 5 minute, what you call it, this 5 minute consolidation that I saw here. And what I'm going to do is I'm going to set a mental stop about 10 pips away. And to me, that indicates, if this pair fails off of this trade that I currently took and it moves, all the way back down to here, I was wrong. Then I think it's better to just exit. I think we have current intraday momentum on our side, and certainly both currencies are helping. So that's why I was a little bit more interested in taking this trade. So what I also like to do when I enter a trade is I like to set a 30-minute timer. So what this 30-minute timer allows me to do, it's 30 minutes to about an hour. After about 30 minutes, if I'm exactly 1 pip in positive or like -5 plus 15 pips, if I'm in that range after 30 minutes, I'm comfortable holding it just a little bit longer, but all the way up to an hour. But after an hour, if it just goes sideways and you're not in extreme profit, if you're not able to move your stop to break even quickly, then at that point it's better to just get out of the trade. But obviously we see the dollar CAD's going up, or sorry, going down. Dollar yen, let me check that pair out, see how that's doing. Yeah, this dollar yen, I don't really like the charts on the larger time frames. The only chart I really like on the dollar pairs is the Aussie dollar right now. So just gonna wait to see how this pair reacts and moves. You know, judging within 30 minutes. If it hits my mental stop, it hits my mental stop. You got to get out. But you know, I think this is a good time to trade. I think, a lot of people have a fear of trading on non-farm payroll days. And I
Mm,
don't think that's a warranted fear to have. Just wait until the news comes out and wait until the market settles down and chooses a direction. When you
yeah,
have that, when it chooses a direction, you know, it's a lot easier to trade compared to if you try to get into a position before the news comes out and you have this major spike. And just wait for the volatility to die down, and then once it dies down, you're cleared hot to enter if there's a clear breakout. Aussie dollar, I believe we have a clear breakout here. So, yeah, this is probably going to be the only trade I take for the day.
yeah,
If this doesn't work out, I'm comfortable walking away. The Aussie dollar might move up, and I really do strongly believe it can move up. But if you got to stick to your rules, and if the market gets the best of me today, it gets the best of me today. I can't really do much about it. There's always another chance to re-enter on this particular trade. So that's pretty much it for me right now. I'll update you guys on how this pair is moving. But yeah, mental stop is in place. Actual initial stop is in place, and I'm just waiting for this pair to potentially move up about 25 to 30 pips, and then I can, move my stop to break even. So that's why I love using price alerts, is because I'm, over here I just set a price alert to move my stop to break even, and then I also have a price alert to get out of this trade. So it's pretty unique to show. It's a unique way to use price alerts. There's a lot of ways to use them, and just like how I showed you, you can use it for profit taking, stops to break even, and mental stops. But that is pretty much it. I don't. Oh, was my chart not showing the whole?
Yeah,
Could you see my chart, Howard?
yeah. I could
Oh,
see.
okay. Okay.
Yeah,
Good.
yeah.
Okay,
That was
yeah.
before. Yeah, so the message was before. So,
Gotcha,
um,
gotcha, gotcha. Okay. Yeah, but that's pretty much my take on today. If this trade doesn't work out, man, who cares? I'm
yeah,
gonna be coming in next week. Next week there's always another opportunity.
yeah.
So,
Totally agree.
yeah,
Totally agree.
simple day, simple day. It's not patiently waiting and trying to analyze the markets. The markets, told me what to do, so I'm gonna do it. And if it works
Yeah,
out, it works out. But
yeah. Yeah. I was just gonna just quickly run through some of these dollar majors just to sort of show where what I'm looking at. Obviously, I'm long euro dollar. That's my trade.
yeah,
But
please.
just to sort of just to sort of go through some of these things, just to give you an idea as to what I think they're up to.
Yeah.
1 second. Let's kick it off with the weekly again. So always start with euro dollar on the weekly. So as I say, this for me is the kind of major low back in 2022, September 2022. First leg up, call it wave one. Then we had a three-wave correction against it, A, B, and C for wave two. And we've broken through the high of wave one, which confirms for me a wave three position. Now, in Elliott wave terms, wave three is usually the longest and the strongest of the impulse waves within a five-wave sequence. So I'm expecting this thing to be basically in a kind of acceleration phase, and not see the typical big pullback that we very often see when the market's kind of doing normal stuff. I think we're in a kind of acceleration and a breakout phase on this chart, which was really why I was looking for a corrective low, not a million miles away from last week's low and the old resistance levels up here. So as I said before, I think what we've done this week so far, and the week is obviously nearly finished, qualifies for that kind of corrective pullback in an acceleration phase like we saw before. Very often you'll get that where the market, it's in a real strong phase. You'll get maybe one or two attempts at going against the trend, and that pretty much does the correction. And then once we start breaking through the reaction highs, then we can start to accelerate again. And euro dollar typically does that on a weekly time frame. So you get a big kind of thrust in the direction of the trend, maybe one or two small real bodies and little shadows against the trend, and then up we go again, acceleration. Same thing on the downside, swing, minor correction, swing, minor correction, like that. And I think that's essentially what we've done here. We've done basically a 1.5 week correction within the bull market. So
Yeah.
for me, I think that was the low that we saw yesterday, the low for the correction. And when you add into it the fact that we've had that anti-news move now, that,
Hmm.
that I was looking for earlier on, where we had the non-farm payroll, see the knee-jerk reaction lower, and then boom, we're back up again. They try to take it lower, and we're back up again. And guess what? We're making new highs for the day, or we have made new highs for the day. So anybody who sold into this non-farm payroll is now clearly underwater. Anyone who sold on the number. and that can often be a catalyst for a very strong move in the opposite direction. So that's that. So yeah, on to cable, sterling dollar. Now this one's been a bit more challenging for me, in that last week we saw the rejection, and it wasn't a big rejection, whereas euro dollar was quite a big kind of corrective move. This week we saw a new high for the trend, and it snapped back again. So we're kind of chopping around this this major high on cable. But again, I still think that we are, as with euro dollar, and we'll do dollar index a bit later on, in an acceleration phase within this kind of long-term trend. Let's just move it back a little bit. So just going back to the that's the Liz Truss bottom there for the pound when we had the disastrous mini budget, and that was the bottom of the of sterling kind of thing. So we had the first leg up, pull back, new high, pull back, didn't make a new low for the still didn't break the structure in terms of the last higher low within this developing trend. And since we've kind of we're just toying with the high. We broke it, but we're kind of just toying with it. And I think we are kind of in a kind of a third wave type situation here, where we should be accelerating higher as euro dollar accelerates higher as well. So this kind of messing around at the swing high, I guess it's only natural to see a little bit of profit taking around a major level on the chart. But once it starts to clear it, I think people will realize that we're into a new paradigm on cable, and it should be going much higher. Onto the daily. Just 1 second. My charts are a bit funny. So on the daily, we had this kind of swing. Then we had that real kind of weird volatility here, up V-shaped reversal, down V-shaped reversal. So we kind of stopped out all the buyers, then we stopped out all the sellers, and then we kind of went back to equilibrium, and that consequently led to that massive run up. So since then, a little bit of sideways action. I guess some people are looking for this to kind of top out and maybe see a big deeper correction, but for me, wouldn't surprise me to see another higher low above this pullback low here. Maybe again, as with euro dollar, the kind of like a running sideways correction that ended yesterday, possibly. We don't know yet. Obviously, we need to see some upside action. But yeah, I think sterling by comparison has been a little bit trickier than euro dollar. But that's the nature of the beast, I guess. So looking for this one to, I guess, break yesterday's high, and then 133.45 or so, and then we're off to the races again. In my opinion, I think we could see new highs once we can take out yesterday's high. So that's that one. Onto the short-term charts on that one again. That one's a bit more extreme in terms of the reaction after non-farm payroll. So cable basically snapped back, saw the knee-jerk reaction, more extreme than euro dollar, I would say, and then all the way back up to the origin of the news. So anyone who sold it on the news or after the news is losing money at this point. And now we're starting to see the short squeeze. We've broken through the earlier high, and before you know it, who knows? We could be seeing a very good short squeeze into the end of the week close. So that's cable. Moving on to dollar yen. So dollar yen on the weekly, we based out at a very important level. This kind of 139.58 or so. I guess just 140 plus or minus kind of thing. Big support down here. So last week we had this kind of again with the dollar majors. We saw 3 quite aggressive selling weeks, and then last week we saw a reversal right at that support level, which is again like cable, sterling dollar, a natural place to expect some kind of profit taken if you're short, or maybe some buyers come in to say, this is cheap, quite possibly. But yeah, so we got the kind of reversal from that big support zone there. And this week we have seen quite a lot of follow through on the upside. I think it went a bit further than I expected. I was looking for it to top out, I think somewhere in the 144s, but we've seen a slightly stronger rebound than I expected, but it's still within the structure. Let me just show you what I was looking for and why it's not been negated. So for me, what I've had from the high, I've had this kind of first wave down, a second wave correction, and I think from this point we're kind of unfolding in an extended third wave, which should see the big acceleration lower. Now I was expecting this thing to kind of top out in between these two lines here, but it kind of just poked above it, closed above it yesterday. It looked pretty strong, but here we are today. We've kind of reversed a very large amount of yesterday's buying. So this is the kind of thing that you want to see, I think, when you are kind of going for the next leg of a trend. You want to see a good correction and then a good reversal of the move of the the last leg up, preferably with a little bit of a news kicker in there, which is what we see with non-farm payroll. So for me,
Yeah.
all the ingredients are really kind of in place for me. Let's just go to the intraday chart just to show you. So yesterday, I mean, the yen crosses had a big. I'm sure you saw that yesterday. A lot of
Yeah.
yen weakness across the board. Um, it's quite a big day for the sterling yen and euro yen. They were both really kind of pushing higher, and everything looked really rosy for the yen crosses yesterday. And it closed very quite strong. Push higher in the Asian session, and then snap back inside, and then it kind of went down. We saw the dollar weakness all the way through today's session, with the other markets as well seeing dollar weakness, and then the figure came out, non-farm payroll. It, that little candle there is non-farm payroll. Let's kind of zoom in. So just before the number, it was at 144, 47. So it flipped up to 144.96 and then all the way back down again. And again, we're kind of trending lower now. We're making new session lows. So as with euro dollar and cable, anybody who bought dollars after non-farm payroll, a bullish number, are not feeling too happy about the what they've done now if they're still in the trade. So and again, to me, it's in line with the bearish outlook for me in that this is most likely for me to be the end of a bear market rally. I think that's the end of the bear market rally, and that we are resuming the downtrend, the major downtrend for dollar yen. Let's go back to that weekly again. So for this one, obviously, what we've got, I think we're building some kind of double top pattern, or we have been building it since 2024. So
Yeah.
kind of a
Yeah.
long. It was previously in a big long term, big bull market, but for me, there's the push higher, all the way back down. There's the retest, and then all the way back down, gravitating back down towards the breakout point or the trigger level, if you will. Yeah, so I think last week obviously was a bullish looking week. This week we saw the attempt at breaking higher, but it looks like it's forming that shadow, which kind of tells you that maybe that's the top of the correction. At least on my side, that's what I'm thinking anyway. So this could be the precursor. Maybe next week we start to see this thing have a crack at the level, and then once this thing breaks, this is going to be off to the races, in my opinion. I think this could be a very powerful move lower, but obviously we need to break through the support levels to really confirm it.
Yeah.
So that's where we are with dollar yen. Other majors, dollar Swiss. So dollar Swiss had that really nice range, which I think was a bearish. Well, it broke down, so I guess it confirms it was a bearish continuation pattern. Long-term trend is down for the dollar against the Swiss. In fact, the Swiss franc has been quite strong against most, as you know. The Swiss franc has been in quite a bull market, hasn't it, of late.
Yeah. Absolutely.
Um, It's been I think a bit of a flight to quality type thing, isn't it? There's that people buy Swiss francs when things are not great in the world economy, and
Yeah, right. Yeah, absolutely. Yeah, Swiss franc goes absolutely nuts at that time. Yeah, whenever there's extreme market volatility, Swissies always got something to do with the major
yeah,
moves happening in the market at the time.
yeah. I'm quite. I guess I'm quite lucky in that I live in Switzerland, and all of my financial things are based in Switzerland. So I'm lucky in that
Nice.
respect. But only in times of stress.
Yeah, right.
Anyway, so times of financial stress. So yeah, so this one a bear market for me. We've had this big long sideways range, which is a bear market consolidation, I believe, and obviously the recent action has shown that it quite possibly is. So it was stuck in the range, quite a clearly defined range actually, quite a nice kind of buy high, sell low, or the other way around
Yeah.
type thing. But then we broke through. We broke through. We closed below it. 1, 2, 3 weeks. We've closed below this floor. So I think that is quite conclusive to me, in that we've got a new paradigm for the dollar at least, and quite possibly the Swiss franc. I think this is more about the dollar than the Swiss franc, to be honest with you.
Yeah,
And we'll
I
come
do.
to
I do too.
the dollar, yeah. And we'll come to the dollar index a little bit later. I guess a little bit like dollar yen, we saw quite a good bullish reversal candle last week. That looked quite promising, as with dollar yen. Um, Although I guess by comparison, the dollar yen one was at support, whereas this is from broken support, underneath broken support. So there's a slight difference there, in that the dollar yen one probably should have seen some follow through, whereas this one maybe not, because we've broken through major levels here. So yeah, I mean, and again, only natural after a big acceleration lower like this to see a bit of short covering, snap back. And the rebound is struggling at the broken support levels, which is again only natural in terms of the technical analysis textbooks, where support, once it's broken, convincingly becomes resistance. So it's no
Yeah.
surprise to see these levels above the market, because there are lots of people that are trapped above these lines, I believe. There are people that bought the market on the pullback thinking the market was cheap, and now it's got even cheaper, and now they're thinking maybe perhaps not such a good idea, and that's why I think this area is resisting on the bounce. A little bit like crude oil, which we'll have a look at a bit later on before the recent break, um, where it was stuck in a big range. The support broke. We saw a retest, and then we've seen the market kind of ease off again, kind of thing. So yeah, dollar Swiss technical rebound, which I think has probably stalled and maybe done its worst. And I think the pressure should start to be on the downside again going into next week. So that's dollar Swiss. Maybe just take a look at the daily as well while we're at it. Yeah, this little pattern is interesting. This happens quite a bit with some of these charts, where you get a big thrust in the direction of the trend, of a shallow correction sideways where there's no real buying pressure. You get a push through, which turns out to be a bit of a false break, and then you get the real correction like this. And then this is the ultimate trap, because this is where the real kind of selling comes in. And it looks like we're doing that kind of thing now, where we trap the sellers, and now I think we're trapping the buyers. And once we start to break through, what is it, 81.95? We're at 82.35 right now. Once we break through 81.95, which is this low here, I guess you could probably call that a double top. Once we break through this kind of, or an M formation, or whatever you want to call it, and then that for me will be the trigger for a retest of the lows and much lower. So you can see I'm bearish on the dollar against most things.
Yeah.
Yeah, what do you think? Any big thoughts on the Swissy or the dollar in
Um,
general?
I didn't do my spreadsheet today. I couldn't care to have done it today just
Yeah,
because the market, didn't really show much direction before coming online. So I was like, yeah, why even bother? I just
yeah,
wait until the news comes out, and then I think that just the market had to choose a direction, and I was gonna wait, until after the news for it to choose a direction, and it's chosen a direction. Dollar weakness has certainly come back in, I think you could have certainly taken a basket trade against every single dollar pair almost, and made some profits. But um,
Yeah. Yeah.
personally, I like
Yeah.
the Aussie dollar, and the dollar yen is definitely, I think, the best mover for today. We have consistent yen strength. It's more dominant than the Aussie dollar strength, so I'd certainly I like that a lot. But um,
Yeah.
there's always another chance to get in. So with this non-farm payroll news, my game plan into next week will be to reanalyze the market, see how the market opens on Sunday. For me, it's Sunday,
Yeah.
and
Yeah.
do my analysis, get my price alert set in place, and see where things are heading. Dollar CAD, I think, is certainly broken out too, but there's not much consistency with the Canadian dollar, so the movements on it are a bit more choppy. I guess
Yeah.
I'll show an update on how my trade is going so
Yeah. Go
far.
for it. Go for it. Yeah.
Okay, it should be up now. Can you see my screen?
Yep. All good. Yep.
Okay, nice. Yeah, so we're in a bit of profit with the Aussie dollar trade. I'm kind of don't like how it's moving. It's moving pretty slow. It is a low volatile pair, but with the dollar weakness in place, I was hoping that it's going to push a lot higher. So got about a little bit more time. I might move my stop to break even, in a little bit, but I'll just continue monitoring how these 5-minute charts are moving. But what I was saying with that dollar CAD, we pretty much testing that low that I've been looking at for what seems like for ages on this daily time frame. I've been wanting it to break, where it's pretty much at right now, and the only reason I did not enter into this trade specifically is because we do have the intraday momentum, but the Canadian dollar itself is not really showing a lot of support for strength. It's kind of like the dollar's weak and the Canadian dollar's kind of weak, so it's more of like a weak against
Yeah.
weak trade. Which when you get into that, you get worse
Sure.
looking retracements, and yeah,
Yeah. Yeah. Yeah.
it just
What are the leaders kind of thing? What are the kind of what's leading the market? Is it dollar yen or is it dollar CAD
It's
or
dollar
yeah?
yen for sure. You can see the
Yeah.
dollar yen on this intraday chart. It looks the best out of all these guys. So the euro USD, the euro is more neutral, so it's more so the dollar strength kind of pushing it up. But I'm starting to see a lot of retracements kind of happening right now. They're kind of consolidating. The volatility is not um, moving. I just want it to move in one direction. When it starts
Yeah.
reversing like this, I start to get a bit
Yeah.
queasy, and I start to think, it might be better to exit, because I hate
Yeah.
being in a position where I'm in profit and then I get out, um, or then it knocks me out. But if today's one of those days, it's one of those days. We always have another chance to get in next week, but you got to learn to always protect your capital. So um, I'm gonna look at how these pairs are moving. Let's take a quick look at the Aussie dollar pairs. Yeah, you see the Aussie dollar is starting to reverse on the 5-minute charts on all these guys. So I think it's best for me to close out of this position.
Yeah.
I'll take a look at this.
See.
Once it rebounds and potentially breaks out again. But I'm just looking at how the intraday was moving on that pair. I kind of didn't like it, and that's okay.
Yeah. Yeah.
There's not much to do. That's how trading is, man.
Yeah.
Take a break. It's time to walk away from the computer.
Yeah.
Things are kind of
There's always
correcting
something. Yeah.
themselves.
Yeah. You
Yeah,
come back and there's always something else to do when you come back. And yeah, it's
exactly. But one thing I really like what I did here is even though we were in positive pips. You have to understand when your game plan is following through at one point, it can completely crash on your head the next. So, you know,
yeah.
the game plan was for it to, go skyrocket, hit my little price there here so I can move my stop to break even. That did not happen. So I think, because it's just moving a little slower, I don't know if I'm gonna re-enter into this pair. I'll
Mm,
definitely check out how things are going, but I certainly you could have made pips on the dollar yen. I think the only thing was, when non-farm payroll comes out, when the news comes out, you have, a pretty big spike for like about the first 5 to 15 minutes of the news
Yeah.
being announced. So what I'm looking for is a consolidation to happen. So like on this Aussie dollar pair, the news comes out, we can see the news spikes here, and then it starts to consolidate for a little bit, and then it starts to choose its direction. That's why I bought this pair, and because every single other dollar pair was moving in weakness.
Yeah.
The US dollar was driving the weakness, so I was more comfortable entering in on that. But um, this is kind of what I do. The smaller time frames, 5, 15, 30 minute, use the intraday time momentum to enter in on the trends on the larger time frame. Now,
Yeah.
this trend is really nice, it's really strong, but you know, the intraday momentum kind of just not got the best of me today. So, um, it happens, there's not much you can do. At this point, just sitting here and looking at the screen is certainly not going to help you. So, I mean,
No.
I'll just
No.
move on from this pair, but yeah, you want to add anything to that?
Yeah. Yeah. No. My trades are a little bit sort of a longer term time frame. So
Yeah,
I'm kind of
yeah,
I'm sitting through. Yeah. I'm sitting through these little kind of counter trend pullbacks and stuff. But
yeah.
may be wrong. Yeah. So
Yeah,
I'm
hopefully
looking
not. I
for
mean,
a
I
good
hope these things continuously push up, It's just I just get so nervous when things, they go into profit and I'm not able to get my
yeah.
stop loss to break even. And then, it's better
Yeah.
to be out of the market wishing you were in than in the market wishing
Yeah.
you were out. That's a
Yeah.
saying that I've kind of just held close to my heart that I've, mentors have told me, and
It's a good
man, I
one.
can't
Yeah.
tell you how many times it's saved me.
Yeah.
So, yeah,
No. So yeah, it's a good one.
yeah, we pretty much just got at a break
So
even
yeah.
today, but yeah,
Yeah.
that was pretty much it for me.
Yeah. Let's just take a look and see what I'm up to. My break buying on euro dollar. So it's, I think, still on side a little bit. 1 second. Let's just should be coming through now. Okay. Yeah. So yeah, this is the 30-minute. So yeah, so non-farm payroll started at 113.33 or so. The news came out, it was bullish for the dollar, bearish for euro dollar, and it shot down to just above 113, where I guess buyers came in, and it reversed, and then here we are making new highs. So I added to my long, so long basically 112.80, added to it 113.55, and I've got a combined stop now just below the post news pullback low. So if we get back down here, that would not be very good for what I'm thinking of on this particular market. So yeah, so we've broken through. We're seeing a bit of a pullback, as you say. High so far is what just below 113.80, so we're at 113.67 or so. We're just easing back. We're still above the breakout point at 113.54, and let's see what we can do into the close. What I'll probably end up doing is taking half of it off if it's in profit at the end of towards the end of the session, and
Yeah,
running the core position. And the average on the two will be a decent kind of price anyway. So
yeah, yeah,
that won't be too bad if as long as we're kind of holding up here, and then maybe we see a bit more strength into the close. That'll be pretty good. The daily is shaping up now into something that you'd like to be long of, although yesterday when I bought it, not so much. um, yeah, so hopefully we can get a decent-ish close on this thing. And this was, the rationale basically was, let me just do that. My kind of zone of interest, if you will, was really this area here on the daily chart. Obviously, the weekly chart, you've got the broken resistance level, which comes in around here. But on the daily chart, it was really a case of A down, B up, and then kind of a C down. So you've got an A, B, and a C, a three-legged correction against the trend, which bases out in this kind of support zone. So anybody that sells into this support zone the idea was that this would be not a good place for them to be short, and perhaps a good place to be taking longs. So so far so good. We'll see how anything's possible on non-farm payroll day. We could get a complete reversal for all we know. But so far so good. It's we've had some supposedly bearish news for this market, and the market is looking very, very strong. So and it's a similar setup. I always kind of hark back to this one. Back in February, we had a similar setup with the CPI. Now, where was it? Was it February I think it was on, yeah, it was February 11, I think it was, back here. So we had a very similar kind of setup where we had a supposedly bullish for the dollar, bearish for euro dollar inflation number, CPI. But by the end of the session, the market was rallying. So that kind of good news, bad price action, or bad news, good price action thing, I like that. If you combine that with your bigger picture view and maybe some short-term dynamics, then that can give you some pretty good confluences, if you will. So yeah. So hopefully that's the end of the correction. Early days yet, but it would be nice to come in on Monday and find that we're breaking through this lower high, 114.25. That would be a trigger for a lot of people, I think. If you sold this breakout, maybe you're stopping yourselves out above yesterday's high, but maybe above the week's high, and I think that'll be a big trigger for the move to new highs. But early days yet. We can't never say never. So where are we now? Yeah, looks like we're trying to push up to new highs again. Let's just have a look at the 5 minute. Yeah, it's literally just hovering around the highs. So yeah, I think we'll just ignore it for the time being. Just let it do what it wants to do. What else do we have? So yeah, we looked at the Aussie. So let's just have another look at the Aussie again. So the Aussie, we have that big support level around which it formed this kind of base. That's a bit slopey, a bit weird. Try and move that a little bit. Yeah, so big support level down here, 61.70 odd, stuck in a range, and then it broke to the downside. Saw an attempt at recovering. It was a weak recovery, and then we had that big flush out, broke through, took all the stops out, and then the V-shaped reversal, bullish engulfing next week, and that for me marks the bottom of the market, the end of the downtrend, and perhaps the start of a new multi-month uptrend. So I think the US dollar is going much lower over the longer term, and it's interesting how the Aussie and the Kiwi, and to some extent I suppose the CAD, were not really doing the same thing as euro dollar and sterling dollar, cable, and dollar yen. They weren't kind of collapsing. In fact, they were just going sideways to slightly higher, and it took that kind of Trump tariff event to really flush out the remaining sellers in this market. And now I think we're going to be doing a weekly close above this double bottom breakout point here, and then, as you say, I think we're going to be going much higher on the Aussie dollar. Technically it looks to be very positive for me. That's that one. Onto the on the daily, obviously we've got that reversal and settlement above resistance or slightly into it around here, and now it looks like we're trying to accelerate out of it. Obviously, let's see how we go. It may come back into the range, but it wouldn't surprise me if this turned out to be just a little kind of bullish pennant or whatever you want to call it, and then we're starting to do some more acceleration. So we'll see. But it looks to be quite positive with the backdrop of the basing at the big support level on the weekly, the V-shaped reversal that flushed all the sellers out, and then settlement and starting to push to new multi-month highs now. So that looks to be quite positive. Kiwi dollar tends to do the same kind of thing, although there's been a little bit of divergence on the weekly on Kiwi dollar. Same kind of thing in that there was a big level in play on the long-term chart. So big level and then range, and then testing the big level, weak bounce, another push through that level, but again the V-shaped reversal higher, bullish engulfing weekly candle, all very positive. So big base at support and then follow through here, follow through. So I think what we're seeing on the Aussie, we've already done. I think the Kiwi has done what I think the Aussie is probably doing now, in that it formed its double bottom and it's moved away, whereas the Aussie's a bit behind in the cycle, if you will. I don't know. Do you look at Aussie against the Kiwi? Is there any trends on Aussie versus Kiwi dollar? No. Oh, sorry, I can't hear you. Sorry.
Oh, sorry, I had my mic on mute.
Oh, you're good.
I was
You're
just
good. Yeah.
I was just gonna say, yeah, I don't think
Yeah.
I've ever traded the Aussie New Zealand dollar personally, but I take a
No.
look at it during the daily market analysis, and typically what
Yeah.
I find is they do the exact same thing. It's either one currency takes a lead, and then the other one follows it. So like if the New Zealand dollar is strong, for a good amount of time, and the Aussie dollar kind of just was doing nothing. When the New Zealand dollar kind of calms down, the Aussie dollar starts to follow. It's kind of like a domino effect,
Yeah.
they follow each other almost. So, but particularly trading the Aussie New Zealand, no, I've never
Not so
really
much.
traded that. Yeah.
Yeah, I just wondered if there's any clues as to which one is kind of leading. It looks like the Kiwi is well, in terms of the dollar decline, the Kiwi seems to be ahead of the cycle, but I don't know whether it's whether the Aussie's about to take leadership. I don't know.
Yeah, no, for sure. On the weekly time frames in terms
um,
of the larger trends, yeah, New Zealand is certainly leading the Aussie dollar, but um, who knows what's gonna take the lead here. I think it's more so the U.S. dollar just driving these currencies up. It's not necessarily the Aussie or the New Zealand. I mean, there is some Aussie dollar strength happening right now, but
yeah,
it's
yeah,
more so the U.S. dollar, weakness that's just
yeah,
pushing it up. So I'd have to reanalyze the market, when we come back. I think I'm back next Tuesday, but certainly when market opens
yeah.
over this
No worries.
weekend, I'm going to be taking a look and seeing which of those two is the more dominant one.
Mm,
But you don't always have to have, if the U.S. dollar is showing complete consistency across every single currency pair, the New Zealand
yeah,
or Aussie, if they're both neutral, it's still going to move up because the U.S. dollar is the one driving the movement. You see what I'm saying there? So that's pretty much what I'm going to be looking
yeah,
for
yeah.
is next week
Absolutely.
is
Yeah,
how
absolutely.
they
It does it.
yeah.
Yeah. No, I totally agree. If the dollar is the driver, then there's not going to be a major variation between the two. They're going to be roughly doing the same kind of thing,
Yeah,
against the
absolutely.
dollar.
Yeah.
Um, so just the daily. So there's the kind of like the Aussie, where we saw the Trump tariff news. It's funny because going into it over the previous several weeks and months, it was starting to look quite positive. It was kind of trending higher on the daily time frame, making
Yeah.
higher highs and higher lows. And then the news hit, and the dollar sold off against most things, but the Aussie and the Kiwi went down as well, which I wasn't expecting that. That was a kind of um, strange occurrence. But they both went down as euro dollar and cable went the other way.
Right. Right. Yeah.
So
Yeah,
it was
you
interesting.
get into a
But
weird.
eventually, the dollar trend kind of re
Yeah, sorry, I didn't mean to cut you off. Go ahead.
yeah. No, it's yeah. Please carry on.
Yeah, I mean, I was just gonna say, we had such extreme moves over the whole month of April that I mean, you eventually when the moves can only go on for so long. A marathon runner can only
Yeah.
run for so long before he needs to stop and take a break. And the markets are the exact same. Exactly. Yeah, they're gonna pull back eventually. At one point, there's gonna be some weird stuff that goes on, especially when the market. I mean, last week when I was on, or earlier this week when I was on. Doing the market analysis, every single currency pair was going sideways on the 4 hour, the daily. There was
Mm.
zero trends available. And I was saying, wait until the news comes out. The market usually goes sideways before major news, and we just had some major movements. So it's normal to see this consolidation and wait for it to shake itself out after the news, and then we'll get clear direction. I think now, obviously we have a lot of clear direction, and uh, just if you miss the moves today, that's perfectly okay. You can
Yeah.
always get back into these trends. That's the beauty about trading the trends on the larger time frames is there's always another opportunity to get back in
Yeah.
the same trend. As long as you're not in an overextended trend or you're just way too late into it. If you see the trend indicators just moving completely up and you're in a I don't know, you're 10 days late to this move and it's just gone up for the last 10 days straight, you're late. You know, taking a
You
buy
missed it.
position at that point, you're probably going to pay the price. You're probably going to be sorry that you did. But
Yeah.
um, yeah, it's
Always a second chance somewhere along the line. Yeah.
absolutely, yeah.
Yeah.
Yeah. And it's okay to,
Eventually. Yeah.
yeah. I was just going to say it's okay to take your L for the day. If the market gets the best of you that day and the currency pair still moved up in profit, like the Aussie dollar trade I just got into, let's say that guy continues to move higher, the
Mm.
market just got the best of you that day. It's okay.
Yeah.
Move on, keep your capital safe and move to the next opportunity. So
Yeah.
there's definitely better traders than me out there who've capitalized on this move and looking at me and saying, "Man, you just sandbagged it." So, you know, take that how you will, but everybody has a good day and everybody has a bad day. So, earlier this month there was
Yeah.
thousands of pips that were made. So I'm not
Well.
really here to complain about it. Gold that
No.
certainly made insane moves the earlier this week. So lots of opportunity everywhere. But
Yeah.
another one thing I want to talk about was actually crypto and Bitcoin
Yeah.
specifically.
Yeah. Go for it. Go. So,
Yeah, so hopefully you can see my screen here.
just coming through there. Here we go. That's it. Got it.
Nice. Okay. Yeah. So we're starting to. We made this big push up. So I think it was about 2 weeks ago. I got into a Bitcoin buy position. Actually, right here. It was actually done live on stream. It was a couple
Nice.
minutes before we went live. I actually got into this position here, and then we shot all the way up. And then I took some profit. I closed half of my Bitcoin position over here and move my stop loss to break even. That's what this yellow line is. It's my entry point and my stop loss. If the market reverses and it hits my stop, it's gonna take me out. But
Mm.
um, this is what I really like with intraday momentum. This is, if I go back, well, I mean, you can just see it on the 1 hour time frame. Let's move back a little bit, but the very exact moment I entered, we shoot up. That's what I wanted. That's what I want to see with every single trade. I wanted to shoot into profitability immediately so I can
Yeah.
get my stop to break even. With
Yeah.
the Aussie dollar, we got into profit, but it moved so dang slow that
Yeah.
it didn't move into as much profit as I would hope, as much positive pips as I'd hoped to comfortably move my stop to break even. On a lower volatile pair like that, you got to be at least 25 to 30 pips into positive before I'd really want to move my stop to break even. If it doesn't really reach that point, it's probably best exiting. So, with that being said, we're currently approaching a major area again. If I'm looking at, let's go to the 4 hour again. Right. So we made this humongous consolidation on the 4 hour. We kind of poked our head out, a little bit out of there. We're currently consolidating again on the 4 hour. So I'm just waiting for a break of these highs, at 97,627. You pass there, we can certainly, the goal is to attempt to retest the all-time highs and potentially make even more all-time highs, even push further
Yeah.
than that. And I certainly think it's definitely a possibility, but when you're going to enter, if you have a price alert that hits, you have a breakout point that happens, especially on any crypto, I'd like to see the entire crypto market going up. I don't like to see
Yeah,
just Bitcoin going up for that day. It's got to be every single the top five cryptos,
yeah.
moving up. I think looking at the top three is fine
A
too.
bit of a bit of breadth, market breadth.
Yeah, absolutely. You got
Yeah,
to have some sort of backing on your
Ethereum
side.
and yeah,
Yeah, yeah.
yeah. I know
Ethereum,
I know Paul
XRP,
talk.
Bitcoin.
Yeah, I know Paul talks quite a bit about kind of Bitcoin dominance and lack of it and that kind of thing. And yeah, it's interesting how you know when Bitcoin goes up, it's like if the other ones don't really do it aggressively, is the move kind of not as genuine? It's interesting to
Yeah, yeah, and
see
that's
that.
certainly what you can use. Bitcoin is the 1,000-pound gorilla in the room, so
Mm,
everything kind of just follows that. When Bitcoin moves up, I mean, all the altcoins and the meme coins kind of move up too. Well, actually, I'm not sure about the meme coins. I'd never trade those, but they
mm.
have their own
That- they
sense
can go
of
to zero
yeah,
sometimes. It's like, oh,
yeah, right,
wait,
right.
yeah, forget about a stop loss on that one.
Yeah, yeah. I stay away from those, man. That's too dangerous.
Yeah, yeah,
Yeah,
proper market.
yeah,
But
absolutely. But
it's everyone's different. Yeah, everyone's different.
yeah, and I think we're on the cusp of a major move. I accidentally stopped sharing my screen here. Let me present again one more time. I think
Yeah, go for
Ethereum is also going to be making a move to the upside. We have this the trend indicators. We made a really long move to the downside on Ethereum specifically, and the trend indicators on the weekly time frame are going sideways. The same thing happened with Bitcoin on the weekly time frames, where we had this long move to the downward, and then we started to move sideways on the weekly. My hope is for Ethereum to kind of follow Bitcoin, where the trend indicators are currently
it.
pointing sideways. The daily trend indicators are starting to point up. So again, I'm just waiting for a price breakout point on Ethereum of
Mm,
11882, and then past there, if we do get a breakout, I like to see the entire crypto market going up. And then I think that's a valid entry point, especially since we're not really necessarily trending on the weekly timeframes anymore. Best case scenario, I think we consolidate a little bit more on Ethereum so we can get these trend indicators to pinch off and kind of start crossing to the upside and look like what I have here, what
mm.
happened back here in
Yeah,
believe
takes time.
November.
Takes time to do it, doesn't it?
Yeah, it just takes some time to do it, but I certainly think because these trend indicators are pushing sideways now, and the daily indicators are going to the upside. I think we certainly do have a chance for these guys to start making pushing higher. So instead of pushing lower, I think they can absolutely start pushing higher. But I could be absolutely wrong. That's the thing with um, yeah, that's why I use momentum on the smaller time frames to enter into the larger time frame trends is just for that reason. It's because when I get into a trade, it's got to go positive immediately, and I got to get my stop to break even immediately. And
Mm,
specifically with this Bitcoin trade, when we got in, let's move back. And when we got in, I was able to get my stop loss to positive fairly quickly, and it just kept moving up. It never really stopped. And when I saw the 1 hour trend indicators starting to pinch off and potentially reverse,
yeah,
that was my clue to, hey, yeah, I think it's time to take some profit, and it worked out pretty well. So some trades don't
nice.
work out, some trades do work out. I was hoping that today would be one of those days it worked out, but so I
Mm,
could show everybody what my thinking is, moving into a more profitable trade. But honestly, actually, there really is nothing to do after you move into a profitable trade. Once you move your stop to break even, it's time to go make breakfast.
mm.
So just wait on it. You
Yeah,
let the
just
trend
forget
do the
about it.
work.
Yeah,
Yeah, exactly. And just let the trend do the work and let the money
yeah,
work for you at that point. But yeah, that's kind of how I view the entire markets, whether it's Forex or gold or crypto markets. Is I like to see consistency across the board. For currencies, again, the euro USD, it's not just the euro against, it's not just the euro USD, it's the euro against the US dollar. I got to see some consistency in either one of those currencies. You split them apart. What is the euro doing? What is the US dollar doing? If the dollar is showing
yeah,
weakness and the euro is neutral, well, it's gonna, the dollar is gonna be the driving movement. You'll see it on the charts. So yeah, it's a very basic and simplistic approach, but when you pair that with support and resistance, when you pair that with intraday momentum, profit taking, profit management, and certainly your risk management, your initial stops, and um, looking at intraday reversals, that happen once you enter a trade. Your drawdown is quite low. You're not really taking humongous loss. I'm never really wanted to get my initial stop hit on any position. That's very rare. Uh, because why would you want to manage a losing position? The only time your initial stop should be hit is if there's an unexpected news announcement, and unfortunately, it just happens. It will happen, and it's happened to me before, but it's not the goal of each trade. At least not for me, because I trade with momentum. Momentum means it's got to continue.
Yeah.
So once it stops continuing, I mean, at that point,
Yeah.
get out.
Yeah. Yeah. Do you look at any indicators like stochastic or anything like that?
Nothing, man. I don't look at any indicators. I just got two exponential moving averages on my screen. It's a
Yeah.
5 EMA and a 12 EMA. 5 is the green line, 12 is the red line, and that just tells me what the trend is. Other than
Yeah.
that, everything else is done manually, like analysis mode. What I do for multiple time frame analysis is I do the spreadsheet, so I can actually show you guys that right now if anybody is new here a million times, so
Yeah. Go for it.
he's
Yeah.
probably he's probably gonna get bored of me talking about it. But just for anybody who's new here, and just because I have nothing else to talk about. Um, okay, yeah. So hopefully you guys can see this spreadsheet up. This was the spreadsheet I did earlier in the week. I believe last time I was on, and you see we had zero trends in the market. So what I like to do is I like to line up every single currency pair, for example, on MetaTrader, where I'm doing my analysis, I like to set up every single pair on the weekly time frame first, and then these trend indicators will tell me, is there a trend in place? So the weekly time frame is currently, the trend indicators are pretty much pointing sideways. So I would classify this as a no trend, and then I do that for the daily and then the 4 hour, and then I populate that into here, and then it automatically sorts itself out, and it tells me what's going on with the larger market view. What trends are in place, what currency is really controlling the long-term strength or weakness. And um, all the way from looking at the markets on the higher time frames, strength and weakness, I do the same exact thing on the smaller time frames, strength and
Yeah.
weakness, who's pushing the movement. And um, it works really well. When the choppy market happens, you'll see it. You'll see a bunch of no trends. If you get more than half of the market, I trade 28 pairs for Forex specifically. If half of those pairs are going sideways, the market is pretty much chopped up, and it's better to wait for either a news
Mm.
announcement or just sit on your hands and just not trade for that day and just come back another day to potentially where you'll have some sort of consistency. Now, with today's moves, I'm very sure next week when I come in and do my market analysis, this weekly time frame, it's showing US dollar weakness. You know, it's probably going to look like that on the daily
Mm.
and the 4 hour, just because of the moves we've pretty much had today. So, uh,
Yeah.
you know, we've identified strength and weakness in the market. The dollar being weak. So then we go to the charts and then we look at support and resistance areas. I want to see, does this specific currency pair have a room to move? And best case scenario is I'm pairing strong against weak. There's a lot of room to move. Hundreds of pips of potential, like the Aussie dollar uh, chart that I showed earlier. And when you have that, pair that with your strict entry management. Try to get into profit immediately, and then when you do all those things together, you find your trading system becomes very low. There's low drawdown on the system. That's what everybody wants. You don't really want to just sit in the trade and
Yeah.
and be in negative position for days and days.
Yeah.
Get into a positive
Yeah. And
position
just
and manage that.
yeah, we don't like drawdown.
Yeah,
We
absolutely.
like drawdown.
Yeah, yeah. I see. What
Okay.
I used to do before was I just would be on that hope factor,
Yeah.
put a
Well,
trade
it's going
in
to
and
come. It'll come back. It'll come back.
Yeah,
I hope.
yeah. Just put a trade in and then put my stop, a good amount away. Yeah, it works if you follow the trends on the larger time frames, a lot of the times. But I've just found I really like doing it this way a lot better, and it really does work for me. It's nice. You get to minimize the time you're in front of the screen, and you get to know pretty quickly if you're right or wrong. So
Yeah.
yeah, it allows you to
Mm,
be more aggressive with your entries. That's the fun part when
yeah.
you when you get into a really aggressive entry. And I think on gold specifically, when I entered a week or two ago, um, we
You had
had
a,
some.
you had a good short on the gold, didn't you? I think you had a really good
I
short.
bought it and then I sold it as well.
Oh.
So we had a
Mm,
humongous move. I bought gold two times and I sold it 2 days ago when the recent pullback happened,
nice.
or
Nice one.
reversal happened. But yeah, gold specifically, I think it's about 1,200 pips on just one single
Oh.
trade. It absolutely massive, massive, massive.
Yeah.
And I went in really aggressive with those trades, so that it was nice to see all that. But the market can, just like how today didn't really move like how I wanted it to move. So it's better just again, that saying comes around. It's better to be out of the market wishing you
Yeah.
were in versus in the market wishing you're out. So.
Yeah.
Um, Yeah, yeah. I kind of feel like I'm just blabbering on
In,
here,
in,
but
in the
there's
words of the
not much
Rolling
I can really
uh,
add.
no, I'm gonna say in the words of the Rolling Stones, you can't always get what you want.
Yeah, yeah. You learn that really
So yeah,
quickly in trading,
yeah,
man. It's
yeah.
yeah.
Let's
But if anybody
can I
has any
just take a look at
questions,
yeah, go for it. Yeah, I was gonna take a look at gold while we're talking about gold.
oh no,
Maybe
go
have a
ahead, go ahead.
and we'll
I
look at
was
go for it.
yeah. Go ahead.
Uh, okay, so gold. Oops. Let's get that
Got
chart
a
going.
viewer,
Yeah,
Robert
it's a
says good morning. I'm just
bit
listening.
weird.
Good morning, Robert. Hopefully you're having a
Hey,
good day.
hi Robert, how you doing? Non-farm payroll. Did you trade, Robert? Okay. Yeah, so gold, obviously, but yeah, major trend for me is still up. Um, mm, so we've had this kind of, that kind of bearish reversal day at the top, 3,500-ish, and then after that, a little bit sideways chop, and then we've seen this push through to new lows for the pullback. So for me, I was looking for it to base in this, and we're kind of still in that zone now, I guess. Yesterday we really probed it, and then today we're trying to move higher in a similar way to what the euro is doing, but obviously there's no real momentum yet to the upside on gold, so it's not doing what euro dollar has done so far. But yeah, it's certainly trying to base in this zone. You've got an old swing high that comes in at 31.67.5, and you've got this little minor congestion here, 31.93 to 32.45. It's funny, these congestions, they're very small, but in real in real terms, the sizes of these ranges have got very big
Yeah,
due
they're
to the
massive.
volatility. It's like now you're looking at 5-minute charts thinking they look like daily charts, from the old days. But yeah, for me, the major trend is still up. We've seen a pullback into support. This seems to be quite a strong kind of area, but I don't want to buy the thing until I get a bit more confirmation. I'm really just focusing on euro dollar at the moment. But it's kind of into the buy zone for me. So I'd be looking for signals that, or perhaps on the shorter term charts, that give you kind of a kind of bullish confluence going forward. We're still by rights, we're still kind of under broken support here. The low was it 32.60 or so. So we're still below it. We've not really got back above it convincingly yet. So maybe we need to break yesterday's high, close back above broken support kind of thing, to say we've seen the end of this kind of correction. If it does turn out to be not the start of a new bear market, which it could
Yeah,
do,
yeah,
we don't know. Anything's possible, obviously. So yeah, just keep. I think gold is one to watch really at the moment, in terms of perhaps resuming the major uptrend. So that's gold. Crude oil has been quite interesting of late. Up in a bit of a bear on that one, and that one has kind of played out quite well. So just to give you the backdrop on that one, it broke down from a descending triangle on the weekly. So big level, 64, 65 or thereabouts. So it's basically it been in that range after the big inflation high on to early 2022. So it topped out, came back, and it just settled into a range. But we had the kind of lower high, lower high, lower high, and lower high. Then eventually, boom, down it goes. So a nice classic technical breakdown. After the breakdown, we got that bullish reversal week. Then a couple of weeks of trying to go higher, but it's stalled at the broken support line. And this one, I think, is a bit like that dollar Swiss one we were looking at before on the weekly, where it broke through. There was a big range. It broke through with a lot of force and violence, and we've seen a retest, but the retest has failed to get back above it. And you can see there's a bit more aggressive selling. This is a weekly candle. So after a couple of weeks trying to go higher, it started to come down again. It's interesting because that breakdown was kind of when the stock market broke down. There was a kind of big sell off on a lot of the asset classes, and it had the recovery along with the stock market, but it's decoupled. It started to head down again. There's something else going on with the crude oil market, and I think it's just the fact that we've got this massive overhead supply above this broken support line. Such a good idea, and I think that's why the market stopped rising at this broken support level, because the supply coming out here is just too strong. There are people that want to get out of a losing long position. So yeah, it looks like it's starting to. I think we'll crack this low. I think we'll see an extension of this this new downtrend to new lows, maybe into the kind of 50 area, and we'll see what happens from there. But it looks like it wants to go lower for me. Let's just zoom into the daily on this one. Down. There's the bullish news on the tariffs when it got reversed on all the markets, Bitcoin, stock market, etc. And then this kind of recovery along with the stock markets and the cryptos, and then it just topped out at that broken support level. It's just too strong. So a bearish outside session, a very weak retest, and then break of support, and away we go. And we're just kind of chopping ahead of the lows. So I think this thing ultimately should be breaking through to new lows for the downtrend. So we'll see. But it's interesting how some markets, they're all doing the same thing 1 week or 2 weeks, and then they start to decouple and they do their own thing. Something bigger takes precedence, and I think that's what's happening with the crude oil market. That it might be talking about saying something about the world economy. It could be something like that, possibly. But that's for people that look too much into the stories.
Yeah,
always
right.
Sometimes it's good to know, to have a story to fit the trade. A lot of people do that. But yeah, technically it looks to be quite vulnerable, I think, going into next week. So that's crude. The stock markets, we got the S&P, which that's just the bigger picture chart on the stock market. Basically, it based out. I think the NASDAQ did a similar kind of thing. It based out pretty close to broken resistance. So this kind of bear market, or ultimately a bull market correction by the looks of things, it based out at the old high, and having done that, so big bullish week there, small bearish week against it, Last week we saw a bullish outside week, or a bullish engulfing, if you're doing candlestick terminology. So a bullish engulfing, and this week we're seeing the follow through to the upside. So this is all kind of constructive, bullish price action, I would say, for the stock market. So seems to be quite positive. Are you looking at the stock markets at all?
No, personally, I don't.
Yeah. So it's been been very interesting of late. What with uh, the Trump news, the tariffs, and everything. The bad news followed by some of the good news. That's really
Yeah.
what's happened. But yeah, it looks to be quite constructive. It's rallying off of a big support level in a very long-term bull market, so it could be heading up towards the highs. So we'll see how that shapes up. So that's the S&P. The NASDAQ, I know Robert looks at the NASDAQ, very similar picture with the NASDAQ in that. Let's just go back to the prior high. Yep. So in that the NASDAQ kind of based out, same thing as the S&P, I suppose, similar kind of thing, where bull market, that's the 2022 bear market or bull market correction, as they always tend to be in the end. When people talk about stock market, bear markets, at the end of the day, if every bear market gets reversed, for me, it can't be a bear market. It's just a correction.
Yeah.
So every decline in the stock market has been reversed, and who's to say that this one's going to be any different? At the end of the day, so correction, swing, I think correction, and then here we are. We're basing out at the old high. Again, as with the S&P, we had that kind of bullish, kind of not quite engulfing. What I guess you could call it a piercing pattern if you're looking at candlestick terminology, followed by a kind of a weak inside weak harami type thing, and then a bullish engulfing outside week, and then we're following through now, same as the S&P. So I think the picture for the stock markets is quite rosy. I would say going forward looks to be quite good, at least on the
Nice.
multi-week perspective. So that's the stock market. Things you want us to take a look at while we're on?
Yeah, we got some comments real quick from Robert. Says hit a max loss on one account and minor profit on another. I'm
Done for
done
the
for
day.
the day.
Uh,
Yeah, done for the day. I understand. Nash jumped in too early. Yeah. So Howard, do you have any advice for Robert here where
it's
he
not.
says, you know, adding to a trade, scaling more lots into a trade? I don't know. You want to talk about that?
Yeah, the adding. So yeah, I mean, a prime example has been what I've done with euro dollar today, I guess. Let me just go back to. Oh yeah, you've got it here. So I'm adding to my euro dollar long position, which is a multi-day position. I took the initial long yesterday at 112, just below 112.80, anticipating the turn, and now I've seen something which has given me a new buy signal. If I weren't already long, I'd want to be entering long today, which is what I've done. So essentially what I've done is I've got two long positions and in the same market. So I've added to my long position. So and the stop loss is actually, it was initially long, way below the low. And now it's up at 113, well, just 113.01. I'm going to be adjusting that as we go along, because obviously you don't want the thing to turn around and give back, turn a profitable trade into a losing trade. But the whole thing about adding is you need a new signal, I would say. I wouldn't add just for the sake of it, just because the market's going
Yeah.
your way, because you're making life a bit difficult for yourself when you get a correction. But if you've got a new impetus, something that says, if I'm not flat, I should be long, then I think that's a valid reason to add to an existing position, because you've got a new signal and a new stop loss. So that's the way I treat that. Um, and I think when you get these kind of things, so the situation I'm in with this euro dollar is I've got two very strong signals on the same time frame. So it invariably, if this thing does what it should be doing, blasting higher into next week, then I've literally made the month of May. It's been,
Yeah,
this is my kind of trade for the month, if you will. So
absolutely. Yeah.
that's how I view it. So essentially, the strategy on this one was to get in on the weakness, which I did, and now I'm adding on the strength. So a lot of people do that. A lot of people think, or sometimes you get in on the strength, then you add on weakness. It just depends on how you go. But when you're probing for a turning point, sometimes it's good just to take a small position as the market is kind of moving, making extremes for the correction, and then
Yeah.
add once you think the low's in place. If you're looking to buy, then once you've got the reversal signal on the the typical technical signal, then that also can be a good time to add to a long position, I think.
Yeah. Yeah. I guess for me personally, adding to a position, I rarely ever do that unless there's some sort of consolidation that happens on the 4 hour or something like that. Intraday movement wise, I'm not really scaling into a position. I'll probably go in with a scaled back position if anything. And if I go in with a full scale entry, I don't really need to enter more. But if I'm in a scaled back position and it moves up, I'd like to see the market consolidate on the 4 hour or the 1 hour, ideally, you know, or even the daily, and then a continuation of that trend, and then I like to add even more lots. So, perfect example is what's happening today with the Aussie dollar trade that I got out of. It's actually currently moving back. It's retesting those highs that it made, the intraday highs that it's made, and for me personally, there's two options that I have. One is to scale back and have a wider stop. So I'm in it for the long term and I have a wider stop, just less risk. But the reason I'm not doing that, or actually the second option is to just not trade anything and wait for the next cycle on the larger time frames. But
Yeah,
the reason I'm not going to enter into a scaled back position right now is because just the time of day. These pairs have
yeah,
already made their major moves. The time of day, we're pretty much at the end of the session. For me, the main trading session, it ends at 7:30 a.m. So it's 7:42 right now. So I'm at Pacific time. So uh,
yeah,
end of the main trading session, that's where the volatility starts to kind of kick down and the currency pairs start to go sideways. Now, I could be totally wrong and they can just absolutely go higher and higher. I've been wrong before, but typically that's kind of what I see happens in the market at this time. It's very tough to trade, get into a really
yeah,
sustainable position unless there's a catalyst involved, whether that be news or some unexpected news or
yeah,
whatever. Um, but also the Aussie dollar is kind of a lower volatile pair as well. I think it's not really too important because if you got it, the market can certainly make a low volatile pair into a volatile pair. A 1% move on the
yeah,
Aussie dollar is about like 64 pips or 65 pips. So I don't think I'm going to get a 50% move here to get my stop to break even, which is what I like to look at. I like to have at least a 30, 25 pip stop, uh, pips positive before I move my stop to break even. And I'm not really too keen on going into the weekend with my stops not at break even. So personally,
yeah,
I'm staying out. And this is actually very exciting because this whole week I was trying to look for direction, but the market has broken loose. Now I'm just waiting until next week where, I don't know if we're going to get a consolidation or a continuation, but I'm just looking for a breakout of the highs that we're going to make today, essentially, and then try to repeat my plan for today. Get into a trade, a position, and hopefully it goes up immediately 20, 30 pips and get my stop to break even, and hopefully I can ride the trend out. I hate managing losing positions because I just get too scared. So Yeah, anytime I get into a position, I tried my best to get into
Yeah,
uh,
messes with the psychology a little bit when you.
yeah, I suck at making decisions when I'm under that kind of pressure, especially because I like to go in really aggressive with entries. I like to trade really large position size when um I'm trading with intraday momentum because it allows me to do that. If a trade's going to continue moving up, it's going to continue moving up, and that allows me to be more aggressive because I'm focusing on the smaller time frames. But when you're focusing on the higher time frames, you
Yeah,
really have to account for that, and you're just not allowed to have such a large position size. So position sizing is pretty crucial when you're dealing with the time of day. How far pairs moved. These pairs can certainly move up higher, but they've just moved so much already, and it's already past the news and ending. We're near the end of the main session. It's you put the odds in your favor. The odds of me getting this 30 pip move again is probably not as high as it would be if we were earlier in the session or closer to the news release. So market got the best of me today, and
that
I can
Yanni
say
looks.
that for sure.
He looks.
Yeah, go ahead, Howard.
Yeah. So I say it's when the market has moved as up to its average true range. There's not much further on average that it can go. So I think that kind of ties in a little bit with what you're saying.
Yeah, yeah. But yeah, Robert,
Yeah,
pretty excited for next week. That's all I got to say. Things have broken loose, so excited, really exciting.
yeah. Cool. I think we're pretty close to time now. Yeah.
Yeah, actually, we're good to go. So, Robert, thanks for coming in. Thanks for saying hi, and everybody else watching. Good luck to you all, and have a good weekend.
Great. Have a great weekend, everybody.
Yeah.
Uh,
All right, Howard.
you too, man.
Bye.
Take care.
Hello, Paul.
Hello, mate. How's it going?
I'm very well, thanks. How are you?
Too busy.
Too busy. That's not a bad thing. Well, you know, it is Friday, so thank goodness. What a week. Today we had NFP. I'm not sure if did you watch that or.
I'm so backed up. I was waiting for you to inform me. How bad is it?
No, I mean, it's definitely, well, the pound US dollar went up. We'll have a look at the charts right now. Not really like the strongest reaction, in my opinion. But yeah, I
Well,
did
it's
take.
a lot of factors, isn't it? Remind me, what's included in it?
In what?
In the what was the thing we had out today? What was in it?
Non-farm payrolls.
Yeah. So what does that make up? That's
non-farm workers.
NFP.
NFP. And this was another. Let's have a look at the date. Yeah. We also had average hourly earnings, which is marked as high impact news event. Unemployment rate unchanged. Non-farm employment change.
Yeah.
It doesn't show the actual on my
Private
side.
households, non-profit organizations. Yeah.
So anyway, usually on NFP, it's not the greatest idea to trade. Even though, you know, this morning I did take a trade.
What were you trading?
The pound US dollar.
Right.
Traded the pound US dollar, and it was a profitable trade. I was hoping for. I'll show you quickly. I'll show you. Let's have a look. So right over here, I've deleted the lines now. But basically, it was based off. I've deleted the lines now. Where were they? Oh, okay. Yeah, because I created two scenarios in yesterday's session. I don't know if you can remember.
Yeah.
It was basically, there were two scenarios. It needs to go, let me just go to the 4-hour time frame. You can see it clearly here. So there were two scenarios. It either has to bounce off the 50 or the 61.8, or it needs to close below the this neckline or this level here. So we didn't get the actual close. It actually closed above it. So what I did then was I drew Fibonacci levels on smaller time frames, which is from year to year, right?
Yeah.
And then looking for a rejection of that price level. And we got it right there. No, sorry, yeah. That was a 61.8. See that?
Yeah.
So that's where I took the trade this morning. And I was hoping to target the previous lows before NFP. But that's what happened. It came back to retest it, and then it came back lower. And so I just got out around this area. And that was NFP. So, I mean, what can you do? What can you do? It's not the greatest setup in general. It's not a good idea to trade on NFP days, but there you go. So right now for the pound US dollar, and this is also a very good example why you need to wait for. Remember I spoke about this. This could potentially form a double top, but it has to break the neckline, and if it does, then this support level will be weak. But we're not anywhere near that. Well, we came pretty close, but now we're rejecting. So we could very well go into a range, or there are so many different scenarios which I don't like. It could bounce up that 50 or the 61.8, even though I'll probably have to redraw them to get the lowest in there. So let me just do that. Quickly.
Well, there's no rush, mate.
Okay, well, let me do it slower.
No, I mean, honestly, I'm not 100% on top of things today, so you're probably going to witness me charting stuff in front of everybody. So it's a good learning experience, right?
Yeah, absolutely. Okay, so, oh, come on, man. There we go. Okay, so now the 50 and the 61.8 is again in play, and like again, it needs to very clearly reject off those levels. But what I don't like is now you see But this is like you could argue this is now a range, right? Because you really want to break, you want to break out below, and we haven't. So this is one of those, we've shown this before. Like once you get to this level, you can't call it a double top. It needs to break and close below the neckline before you can say, yeah, okay, we've got a double top, and then you can definitely target much lower price points. But right now, VR because of NFP. So let's just see how the day closes. If it can close back below here and the next 4-hour candle kind of ranges in here, then maybe next week we can on Monday, Tuesday, or whatever, it can move lower. But if it's going to move higher to the 50 or even the 61.8 and it rejects off there, yeah, I don't know. I'm going to have to look at, you see the daily is also forming that very strong inside candle in that support zone. So it can very easily just go way back to the top. So I think for now, I'm just going to stand back. I'm just going to stand back and see how today closes before I'm going to, decide whether I'm long or short. I was obviously short, as you know, and I did take a trade, and was a beautiful trade right to the bottom of this daily candle. That was very nice. But now at this range and with NFP, kind of, I don't know. We'll just have to wait now, I think. But for now, I'll mark out the 50 and the 61.8 levels. If you look at the dollar index, we pretty much forming a doji there. So I'm still bullish, right, on the dollar index. So yeah, and the point of invalidation, as I've mentioned before, is like if it breaks this low of this bullish hammer, that's when I'll go, okay, maybe that didn't hold support, and then I'll change my mind, okay, because it did move very low below that support level, and that's a very strong reversal. This is a weekly time frame, so there's a pretty strong reversal right to that neckline. So I'm still bullish on that front. So technically speaking, I'm still bearish on the pound US dollar, but where we are right now is not if you want to get chopped up, take some short trades or long trades on shorter time frames. It just won't work out very well. So yeah, for now, 50 or the 61.8 level, and then I'll just see how aggressively price rejects off those levels. So that is, what's your take on that, Paul?
I agree.
Yeah, good answer. Good.
I mean, you talk about like double tops and stuff. I mean, I frequently fall into this trap where we're saying kind of like there's a double top, but it's not confirmed, right? So it's important to just keep that on. I'm just trying to touch base with what's been going on with the NFP. I'm just catching up. So the employment report showed that the unemployment rate remained unchanged. The labour force participation ticked up slightly, which is good. I just, the thing is, it's with this data, right? It's pretty okay. It's not looking bad for stuff, but it's just like we've got a latency in terms of what data points are arriving. And
yeah, look, I mean, I honestly don't care about what the initial reaction. It's really about what happens after. Ideally for me, this never goes to the 50 or the 61.8. It just kind of sticks here.
Yeah.
Right. It just kind of stays there and then moves lower, because that's really what we want, to get that double top confirmation, and then we can expect much lower lows. But at the same time, not all the way yet, but forming a really nice higher low. That would be super. But yeah, like if it pulls all the way back here, then I don't know. Then the double top is definitely. It's not on the cards. And if this goes all the way to the top, then it could go. Then I'll be in proper, I don't know, land. Then it's like, all right, let's wait and see if it breaks out. I'm not going to guess what's going to happen at that point.
Yeah.
But for now, I'm still bearish on the pound US dollar. Okay, huh?
It's just my dog. She's ready to eat those day, and she's just getting frustrated.
Okay. Yeah. All right. So, and on the NASDAQ, like yesterday we spoke about, actually in the session, we were trading above the 200 EMA. and we mentioned about, let's see how the day closes, and it closed below. But today with NFP, we're back above the 200 EMA. So is this going to be like one of those above below the 200 EMA? And if you look at the smaller time frames, you can clearly see this was the actual news event. So just a very strong, clear push to the upside. No choppiness, nothing. It just shot in one direction, and then that was yesterday's high. It rejected off yesterday's high, and now it's pushing above yesterday's high, as you can also see on the daily time frame. So this resistance level here is still in play. So I think once it gets to that level, we'll see how the daily closes off that. If we get a rejection off that level, then perhaps we can get a pullback all the way. But we've got the 200 EMA in the way as well. All these thorns, all these hurdles. But yeah, so we'll see what happens over there. But I think the next level is going to be this 2340 level if today can close above this 200 EMA. On the weekly, yeah, very strong. Monthly, we've got that strong bullish candle. So yeah, we'll see. Maybe it just pierces straight through. Do you think we're going to make new highs on this one?
I mean, it's looking like it.
Yeah, it does, doesn't it? It sure does. Then,
I'm just reading up on the in crypto, at least in my trading world, there is, you got to become aware of when you're lulled into a false sense of security, right? And with all these conflicting data points and latency to certain data points, we've had obviously the data earlier in this week, and now we've got this, and then I'm a little bit concerned about picking a direction right now, because if you look at if you forget all the the analysis obviously of this data which has come out today is potentially contextually is usually quite, historically is usually quite helpful and good, right? But we know that the context isn't like that, because we've got, say for example, we've got hi Robert, good morning, good afternoon, whichever time zone you're in. If you've got that say shop shelves have got 8 weeks of supplies, right? 8 weeks of supplies, and those are going to run out in a couple of months' times, presuming the tariffs and everything continue, right? So right now we're stable because we're not having any of the impact of what has been happening and what is still happening. But I feel like the trigger at the moment is in the process of being pulled in terms of the results, and therefore I'm struggling to take any of the data points or the reaction to these data points seriously. So everyone says, "Oh, this is good for risk assets because it typically positive NF is good, right?" But I'm not believing it right now.
Yeah, I don't believe any of the news. Look, I don't know if you have any experience with. I used to do this kind of stuff. No, I used to do this. This news event based trading, not trading the actual news event, but looking at whether the data that came out is it dollar positive or is it dollar negative, and then I will trade according to that. So if it's very dollar negative, then obviously I want to short the dollar, and then the dollar just gains strength. I'm like, what the hell is this? So at the end of the day, for me, I don't think there's a lot of things that can be technical analysis. Yeah. But we all trade different, as I always say. Yeah. All right. So yeah, the NASDAQ, I've mentioned this before. I thought we're going to crash all the way here, 50% correction. We're gonna make a new. We're gonna. Yeah, we'll see what happens. I think you just take it one step at a time, one day at a time. We're at that resistance. How does it behave there? Is it rejecting or is it breaking through? Finding a retest? You just take it one step at a time, one day at a time.
Yeah.
Yeah. So for now, anyway, again, definitely looks bullish. And then gold. Yeah, gold is it pushed up higher today because of this NFP. But I mean, this is not a spot. I've marked this level here, 3166. It needs to come lower. I don't know how long we're going to wait, or if it will ever go down there. But that is the level. Sometimes I don't get my levels, and that's okay. But if you're going to start to get in, at levels that doesn't really make any sense, then you really decrease the probability for the trade to actually work in your favor.
Yeah.
So it's not worth it. Not worth it. But on the smaller time frames, you can't even see when NFP came out.
Yeah. What does that tell you?
Yeah, exactly. But even on the pound US dollar again, right? If you look at the pound US dollar, this is the NFP candle, and it's pretty weak. Or was this pretty? Yeah.
I just feel it's like one of those things. Like I'm just being a little bit silly, but when things go a bit rough, say there's a storm or something which is approached, and you're all snowed in, and you can't get out your front door, right? But then someone's moaning about moaning about the fact that they can't watch TV. I'm like, it's not relevant right now, right? It's just not. We're snowed in. We've got to deal with that, right? And I think when you feel that the market not reacting to this data, it kind of underscores what I said, which is like they don't see it as relevant.
Yeah. You're right. And this has actually been going on for most part of this year. Remember, I love to use this the pound US dollar range that we've been in for 2 weeks or whatever it was. Where was that? Yeah, this range. Yeah, remember that range?
Yeah.
In this range, we had core CPI, we had NFP, we had FOMC, we had all of that, and it did nothing. It just didn't do anything. And I almost feel like that's pretty much what happened today. That's you can't even see on the charts, like in this range anyway. If I said to you, like, guess where FOMC was, or if NFP is, like, well, the candles look all pretty much the same.
Yeah, I can show you when Bitcoin ETFs were approved. I mean, that's the point, isn't it? We're not seeing any of that.
Yeah. So, but I think the pound US dollar looks like it's coming down again. So I really hope it can stay below that high there on the 1 hour. That would be very good for potentially just a little range and then a break. That's what I'm hoping for. But hope is not a strategy. Just going to have to wait for it to either break lower or not.
Hope is not a strategy. Maybe. I don't know.
I mean, it's not a strategy, but it's a good thing to have, isn't it? Yeah. Okay.
Yeah. We're not trying to promote no hope here, please.
All right. Yes, Bitcoin. It looks like it's continuing with this bull flag. I'm not in this trade. I find this trade a bit tricky to enter.
Well, we haven't had an yet, really.
Yeah. There's not really an entry. So this could, like, if this just takes out without me, then I don't think so. It will probably, I'm hoping for it to find resistance here. That at the 99 level. And then reject from there.
But yeah. It's what we were saying the other day. There's all these really, because it's really messy double top. There is a lot of these little sub ranges, right? Starting with the wicks, and then so it's got a bit of work to do. But the closer we get to all-time highs, it's kind of like, let's have a go,
Yeah, but you're right. But then I feel like it's almost too late then. I mean, we'll see, but Bitcoin also didn't really react to NFP, and this is also something traded by institutions. It's not just what it used to be in the beginning. People are taking it seriously now. Very weak reaction there as well. Have you ever seen Bitcoin having a pretty big reaction on FOMC days or anything like that?
I mean, but as we've talked about, like, context is everything. So the first I'm sorry, my dog, she just waits for me to start talking. I think she's trying to express her annoyance at the sound of my voice. So apologies to all the canines. So when we had the first interest rate cut following the pandemic, that was significant, right? We'd been waiting for that for a long time. So the markets moved as a result of that. But now it's obviously a different context. Or the second one doesn't, so the market reacted to, say, Jerome Powell being quite dovish about a year or so ago, but that has slowly become irrelevant in itself as well, because he then turned around and says, you know what, actually this was during Biden administration. This is, we probably actually aren't going to have as many cuts this year as we planned, and we're going to maybe delay it to 2025. And now here we are in 2025, where I think the whole, it's not just about inflation anymore. It's about recession. And how do we deal with that? And that might require some rate cuts, which again it's a very complicated scenario. So you say, well, we want rate cuts, but in the context of what we're trying to deal with at the moment, it's a little bit more complex, because it's much more high risk now, because there's soft landing for inflation.
Yeah, you're right. You are right, Paul. I can't argue with that. I struggle to argue with you.
Try harder.
It's like, let's see, look at the dollar yen just out of interest. You can't really see with that. Okay, there you go. So this is again NFP kind of move. This is a very strong downtrend. The weekly, we spoke about the weekly and why this is likely to go higher in the short term, but the monthly is definitely forming that pretty strong bearish candle. So this can go lower. What when you look at that, like based on where we are right now on the daily with NFP and so on, what do you think?
It's weakening. I see it as weakening. Just
Yeah.
on first glance. I mean, sometimes we as traders, we get lost in the weeds with all our indicators, and I think sometimes having a simpler, a cleaner chart can be better, because it allows us to focus on what is the most basic, which is this essential bell curve, right? Essentially, the basic market cycle. And when you start seeing that and visualizing that curve, then that's obviously, we don't need an indicator. It's like, okay, we've got lower highs, we've got lower lows. Could change, of course, but that's the bias, just on first glance.
Yeah, I agree with that. And the thing is that, like, your analysis, the other thing about analysis, you just spoke about indicators. The only indicators I use is the tools has been around forever, like your horizontal line. Right. That's my indicator, or Fibonacci retracement levels, like everything that's built in here. There's nothing special or
Is a line a tool?
Yeah, it's a tool. Of course, it's a tool. What would you do without that tool? You can't draw a line.
Is it?
I mean,
it's such a horizontal line. It's just like
that's my technical indicator. But yeah, so like if I look at the dollar, the pound US, the pound US dollar, the dollar yen. Yeah, I definitely, also think that it's going to go lower. But the point I was trying to make is that you need to reassess as new candles gets added to the chart. Does that make sense? Like the picture keeps changing, and you need to readapt as those new candles gets added to the chart, because you could be bearish, and then the next few candles, like, well, very similar to the this is a good example. Oh wow, look at that. Okay, the pound US dollar is coming down. Yes, that's where we want it. Okay, but anyway, so this is a good example of my bias is short. Okay, not taking any trades or so on, but the picture can change. Like we can break through the 61.8 and just close above it, and then I'll be like, I don't know anymore. But we're not there yet. Do you understand what I mean? It's like the picture. You need to keep in sync with what's happening on the charts, and it keeps changing. But there's a big difference between having the bias of like what's likely to happen now, and then going, like you mentioned yesterday, you were talking about ABC trades. When you have a bias and then everything lines up, and you go, yeah, okay, this is now it's playing out. This is it. Okay, now you're going to take the trade versus what I just mentioned to you right on the pound US dollar. Okay, we at this kind of junction where two things can happen here. It's either going to go back and then we form a range, or it's going to break down.
Yeah.
With a slightly more bearish bias because, the dollar index, for example. Where's the dollar index? Come on. Oh, yeah, that's bullish. We'll see how it closes today. So because of this is a pretty strong indicator for me, and preferably on a longer time frame, like the weekly time frame. So very good indicator. So based on that, I'm leaning towards bearish, but that can just drop below again. You see what I mean?
Yeah.
So anyway, and then that's really all I'm looking. I know. I'll just quickly show Brent crude. This is one that Howard identified a number of days ago.
Yeah, he likes his
that,
crude carrot.
yeah. So that trade is playing out really, really nicely, and he's targeting the previous. I'm not sure if he's still on the trade, but that's not really relevant. He identified this opportunity, and if this is on the daily time frame, I'm not sure if there were any opportunities on smaller time frames. But if you do go too small, like say on the 15-minute, you can get like really just multiple entries kind of thing. Multiple entries, whereas like if you just have a longer term approach, maybe go down to the 4-hour. Let's have a look and see if we can find an opportunity on a smaller time frame. So what I would do here is we've got that confirmation on the daily. This is now just to go back to the daily, yeah?
Yeah.
So we see that candle, we go, yeah, you want to go short, and now you need to find your entry. And because it's such a straight down line, no real resistance, I'm going to open my toolbox. I'm going to use my FIP levels. And I want to see a rejection of the 50 or the 68, 61.8. So I probably would have taken it there. Yeah, probably would have taken it there. And well, like let's assume you had a tight stop loss because you don't account for the fact that it could at least retest this level. Always keep that in mind. You can always come back to retest this level, and the 61.8 is still in play. That's the thing about the 50. Okay, the 61.8 is still in play. So, but let's assume you just like, I'm very confident it's going to take it. It's never going to come back. You got stopped out. That's not the end of the world. You'll get another opportunity here when it rejects off the 61.8, just like pinpoint accuracy, and then a beautiful move lower. Okay, but it does make more sense to when you do get a rejection of the 50, just to always remember that it's very unlikely that it's just going to drop in a straight line. It does happen sometimes, but more often than not, it's going to do this. It's going to test your emotions. So kind of allow for that and maybe place a stop loss much higher, like over there somewhere. And if it does go to the 61.8 and rejects up there, then you can add to your position.
Yeah.
So that's how you could have played. But the Fibonacci level is a very useful tool. But any other indicators? The other indicator I use is the ATR, as you know. That's more for day. Like if I tend to be in the trade just for, I want to close by the end of the day, then I'll use the ATR. So I've got that little indicator there, just counting the pips from the high to the low on the daily, like that. So today we moved 70 pips. The ATR is, depends on which one you're looking at, the 2 or the 14. The 2 ATR is 78, and this moved 71.
Right.
Yeah. So you can target, you can use your ATR to time your, or not to time, but to kind of help you with like where can you expect to take profit. Very useful. But other than that, I don't use RSI. I know it can be useful. I know Igor also likes his RSI. I know you also look at RSI. It's just not something that I've been something I've paid attention to. So, but yeah. And then I don't think I have anything else here. Maybe. No, that's it. That's it for now.
All right, good night.
Over to you, Paul, for now.
Oi, oi, oi. Okay. Right. What have I got for you? I've been frantically charting whilst paying attention to what you've. Oh, sorry. I've been frantically charting whilst also paying attention to what you've been doing. So I've got a few setups today, always some exclusive ones, but just let's have a look at some of some stable coin data. Can you see my screen okay?
I can now.
Okay, so I've only just glanced at this. So we've had a bit of this is total stablecoin total market cap, and stablecoin market cap has just hit about 220 billion. And this is typically the strongest signal that there's improving conditions in the market, and this is obviously the best kind of signal we've had since February. So what does this mean? So stable coins, of course, the key one is majority of trading pairs in crypto are either USD or USDT. Back in the day when I first started, a lot of the trading pairs were just with Bitcoin. But now Tether has obviously a significant place in the market. So what does Tether represent? Tether represents people with money on the sidelines, right? So when the market cap is growing, essentially, we've got people who are bringing money onto exchanges or typically right now there's a couple of ways to look at this, because you can use USDT dominance as a measure of how much money is on the sidelines in terms of when people are waiting for a trade. But obviously when it comes to just general growth in terms of what we're seeing, as opposed to money shifting from an altcoin into a state. So obviously if someone gets stopped out and they're trading a USDT pair, then they'll convert whatever crypto they're trading into USDT, and that obviously increases the dominance. But this, in terms of the market cap, slightly subtler difference could be a suggestion that things are improving. But obviously this is one single move. If you look at actually this is one single move, and I wouldn't trust it necessarily, right? Because as we said, data points right now are quite unreliable. But some shift in terms of people looking to enter the market for sure, but a little bit ambiguous data, this, because it can be interpreted in several different ways. But we're trying to find some bullish data. We're trying to get an insight into what people are thinking. And typically when we see Bitcoin making a bullish move and then USDT market cap kind of grows, or stablecoin market rather just grows, which is predominantly USDT and USDC in Europe, then that's quite a bullish signal. But obviously if we see Bitcoin crash or move lower, and then you see a lot of USDT and you see USDT dominance come down, and that's a sign that people are exiting the market and waiting on the sidelines. But when everything's stable and then you see an increase, then that's usually people trying to join the market. A little bit of a subtlety there. But so this is Bitcoin 12-hour, and obviously nothing much has changed. We've obviously had we've had a breakout of this ascending triangle, and obviously we've broken out against this range as well. But if we look at this chart, we're at the point of control for this range, but we are obviously just breaking above this kind of golden pocket sort of area between the 618 and the 0.5. So pretty bullish actually if we can come up a bit higher, and then, as I said, to the level you were mentioning, and then come back down, because that would be then we have a bit of confluence on this side in terms of longs. So we'll have, because the point of control is like a magnet to a degree, and it is support and resistance. It does act as support and resistance. But if we get a confirmed, so right now it's only just poked its head above it, so I would presume that we might have a retrace, but a bigger move upwards would then of course afford us potentially an opportunity to enter back on the point of control with the 618, and maybe if it takes a couple of days also with the 50. So it's and we've got a potential golden cross coming on the 12-hour as well. So interesting to see what Bitcoin does next, but I won't enter here, because while it's still here, we've probably got a retrace. And I think this is looking pretty tasty, to be honest, with confluence with some of these moving averages we've got. But yeah, it's when I see stuff like this, until I see it move significantly higher into this range, you know, there's a lot of momentum building up, and obviously, you know, when you throw a rock down a hill, of course, it keeps rolling for a little bit, and the same goes in either direction in terms of the market, because there's just buyers just keep piling in. But we have got volume is decreasing, of course, following these moves. So just a word of caution there. I mean, see if there's any divergence. Let me just use my indicator, a proper indicator. Where is it? Okay, so much. Here it is. Let's just use. This is just my cheat. Yeah, there's a bit of divergence popping up, but let's see if I can see it myself on the RSI. Yeah. So when you see quite a lot of divergence like that, and you look at just the basic tier, I've had a nice run up, then, and you know, the price action is arguably weakening because the volume's declining. You know, we're still on the cards for a retrace, and this is, you know, this would be a nice place to go as well. So we just need Bitcoin just to just give us a nice healthy retrace, perhaps, but it's a waiting game until then, unless of course it blasts above higher. But I wouldn't trade against divergence. But this is an altcoin. I've got a couple of setups just to have a look at today. I've just charted this right now while you were talking. I just wanted to check that we do have it on Prime, but we do. So this is Pengu. I don't know anything about the project, but this is, we've had a nice run up, of course, and we've now formed a foundation up here. Now we're just breaking out of the 200 amount of 30 minutes. It's just a 30-minute chart, so it's not quite that significant, but potential trading opportunity here if we come back to retest this this kind of foundation area. If you're thinking of a short-term trade over the weekend, not that I'm promoting weekend trading for crypto, but here's Pengu. A little retrace might be a nice buy here. But I would do a little bit more work on this potentially, because I've only just done this. So let's just.
I don't recommend trading over weekends, but definitely take this one. That's how I would have worded it. But no, I'm just joking.
No, but it's just, you know, so I've just put the order blocks on, right? So the order blocks always for me are a helpful splash of cold water. So if I'm saying, okay, we've broken above the 200 MA, it's just a 30 minutes, so it doesn't have much significant. You could come in for an intraday thing at this level, but if you're thinking a little bit, if you're thinking of waiting until Monday to maybe have a look at this and switching to a higher time frame, then, you know, this seems like a better area to come in on, because we've had a nice run up. We've had a perfectly acceptable retrace, formed a foundation. That's nice, but remember, we have got a potential possibility of a retrace from Bitcoin over the weekend or at the start of next week. So you got to think, how much is this going to retrace if Bitcoin pushes it lower? And, you know, considering that, you know, Bitcoin is ascending, you know, Bitcoin has continued on its way, while this altcoin, of course, has a lot of waiting, and they're kind of to just see what happens next. And if we know Bitcoin is more likely to come down in the short term, then coming in at this area probably isn't the best idea. And if you look obviously on the 1 hour, this area seems a little bit more fruitful in terms of confluence as well. And as long as you can, so there's a trade there, needs a bit of work.
Can you just leave that chart right there so I could just show you my chart on just how I played that one on Bitcoin a while ago, 3 weeks ago, I can't remember. Okay, let's have a look. There we go. Okay, so if you look, here's Bitcoin. Oh yeah. So how I played this double bottom, this is why I said just leave that chart right there. See that double bottom with the break of the neckline? I used my favorite tool, the Fibonacci levels, right?
I thought the horizontal line was your favorite tool.
It is actually. This is like, but I don't want to discriminate against the Fibonacci level. So let's just kind of, you know. All right. So I was looking for, again, between the 50 and the 61.8, and it bounced up there. So it may, I'm just mentioning this because that could also be potentially a level of interest on that chart you just showed. I'm just saying, like, I'm not saying it's, you know, I'm just saying that if that was me, if you said, hey, Jannie, here's a good coin pick, then I'll probably do that, you know, and see if it does hold there. See if it does hold there. Maybe it just crashes through.
Yeah.
But yeah, that was a very good spot. But anyway, sorry, I just wanted to show you that.
I mean, it's a different. Yeah, I mean, with Pengu, it's. Well, let me put the chart back up. Let's have a look. But yeah, that's a good point. Obviously, you're going to see my process a little bit here because I'm obviously just charting this as I go. I caught an eye on it earlier. I just brought it here. So, so what have we got? So, firstly, we've come into this foundation from the underside. All right, just so that's just be aware of the context. Obviously, Bitcoin's double bottom. We were coming down from the top. Slightly different proposition. Now, the thing which is good about the current movement is we've put in a higher high, right? Which confirms this pattern, right? So if this is the neckline, we've got a higher high. Now, if we stick only on the 1 hour, I'll change this to the 1 hour. I think it's a better time frame to assess the trade. And we're cooking a little bit on the RSI as well. So a pullback is absolutely warranted. So I've got a bit of divergence as well. So is this the area or is this the area? So I ask myself the question in these times, where are the most buyers? So obviously the most buyers are here, right? The order block is highlighting that. Plus, of course, we have some confluence with this moving average. Now, I would go on to look at some other time frames and see what other moving averages are. So I'll just as principle, just to show you, I'll put maybe the daily onto this chart. So it's quite helpful when you can add moving averages from different time frames. So let's just make it yellow. Let's have a look and just really kind of dig into try and figure out what this trade is. Now, if I can't see the 1 day, that means it's nowhere to be seen. So where is it? I don't know. I can't find it. That's interesting. Let me. Yeah, sometimes it doesn't. I don't know why that didn't work. There's twice that hasn't worked on these live streams. Okay, whatever. Ignoring that. So this level and this level, we have two possible entrances. This is obviously bullish, a very bullish entry to come in on. It's perfectly normal though. It's this nice place to come in on, and it kind of lines up with what you were saying about Bitcoin, right? In terms of the neckline, that's kind of the level where Bitcoin retraced following its double bottom. But obviously we haven't come up that high yet. So you could say here, but the most buyers are definitely down here with confluence of the moving average and this area. Maybe, for a triple bottom, I don't know. But this higher high, if it wasn't for this higher high, I would be very cautious here because this could very easily invalidate. But because the pattern's sort of being confirmed, maybe watching it range in this area for a little bit and then coming in for a range trade might be a good idea. And obviously the volume is supporting this move as well. So this is the area I would suggest. Let it come to you. There's a lot of, this is obviously, I don't know much about Pingu, but check its market cap just to see what it's like. It's not too volatile in this case, but yeah. So what is this? Is this an A, B, or C? It is a B trade, arguably. Not the best ideal kind of setup, but it is something which I will trade if the conditions are right, and that's what a B trade is for me. So I'm just going to label on there to just keep me aware that I need ideal conditions. So the idea would be we want Bitcoin to retrace, and then with Bitcoin's retrace, Pengu would come back down, enter this area, and then in order to avoid any risk of downside kind of continuation here, you want to, of course, nail the confluence with Bitcoin, right? When Bitcoin comes down, see, look, it's actually, there's a lot of symmetry here. So this is the 12-hour 200 MA. Bitcoin came back down here with 0.5, with this underneath, with some bit of confluence, and then Pengu arrives at this area at exactly the same time. I have confluence with Bitcoin and confluence on this chart, and it's a B setup which requires that. So therefore, that's when I would enter. But if I don't get any of that, or Bitcoin, and obviously if Bitcoin's continuing its way, this trade will be invalidated because of too bullish context. But that's how I'd approach it. But it's definitely not a setup, but it's something tradable for sure.
Yeah, that's definitely something I'd be interested in.
Yeah,
definitely. So that's the daily time frame. No, that's the hour time frame.
Just the hourly, yeah, just the hourly. But you can see us talking through the negotiation of it, and we've also got the 618 overhead as well, so expect to retrace. So this is the negotiation, and if you might say to yourself, well, the 272, this is a good place to enter, but the thing is, it's not just about this TA, it's about the rest of the market, because Bitcoin is king and this will follow Bitcoin, which it is doing. So we have to be very cautious, and you always have to factor Bitcoin into the equation, and you want symmetry with Bitcoin, right? Because Bitcoin, it moves the market. And if Bitcoin bounces and you're entering here and trying to catch the same bounce, Pengu will bounce. One, because it's got its own TA, which is suggesting a bounce is likely here, right? But the other thing is, of course, that if Bitcoin does it, then the whole market will do it. So, and that's what you want. You've got to have that confluence across the different across the market. And this is ID. Again, we provide this on Honor Prime X. I haven't looked at this in much attention. This is a 1 hour. So we've got 200 MA coming in. I'm going to try that moving average thing again, right? Because I'm determined to make that work. I'm not quite sure why it's not working on the live stream. Maybe it's a bit shy. Let's have a look. 1 day style yellow. Here we go. And put this on. I think I got too many charts on. I don't know why it's just embarrassing like that. It's just honestly tools. What a tool. So we've obviously had a run up. We've had a bit of a W of sorts, and now we're above this moving average. Not too significant on the 1 hour. So let's just switch to the 12 hour just to figure out what's happening. So yeah, the 12 hour and the daily moving average will be, oh, there it is. It's too high up. That's why it's on the chart. It's just too high up. So get that off. We've got the sweeping above. So this is a potential target. So be very wary of this 12 hour. The 12 hour isn't too significant because people tend to focus on the daily, and the daily moving average is overhead. But this is what I will do. I'll always wait to see what obstacles are in my way, potentially in terms of when I'm setting targets. So I've had a bit of a look. The 12 hour might be a point of concern, but here we are again. So we've had a ascending triangle which has probabilities in the favor, supported by this 200 MA, and now we are retesting. So this area, this level here right above, is a little bit ambiguous. And we can use that to our advantage. If you look, actually, there's not that much clear kind of, that's quite clear, little bounce, that's quite clear, but all these wicks make this area a little bit ambiguous, and you can use that to your advantage, because obviously if this resistance line overhead was clear cut, like everything was bouncing off it clear as day, like it does here, right, then I would be like, you need to wait till we come up and retake this level before entering a trade. But because there's ambiguity here, there is a kind of a transitory space again, which we keep talking about. So an intraday trade might be to, and it'd have to be quite quickly because Bitcoin will need to remain bullish, but it would be just from here to here, right? A little, very short little scalp trade, just buy the bounce, expect it not to surpass the previous high, just come in just to test that again. And there you go. And with a bit of leverage, that might be 15% or something like that. But obviously, big picture, you could come up to here. This is where we were at the end of March. So if the market does recover and continues on its way, which Bitcoin certainly seems like it's doing that, then this isn't a stretch at all. But you have to be mindful of the obstacles in our way, and that would be a nice little 20%. And you can see, again, bit of a transitory space in here. So if we do get above this level, we could see quite a move up here. And then as we approach the 12 hour, which we just saw, the momentum might carry us through. So there's a few options of a trade here, but still isn't fully realized. So let's see what other traders are thinking. So yeah, so you can see it's pretty even. It's pretty even in terms of the thought process. Retrace to here could be on the cards, but so there's a couple of options. So if we put this trend line on here, always want to have different scenario options.
You see, the biggest mistake you're making right there is you don't have Fibonacci levels on.
Right. When I need them and I need an answer to a question, then I will put them on there. But I genuinely try and make sure I can figure out a trade first, and then if there's any ambiguity about where I should be entering or where perhaps I should be taking profits, then I'll look at the fib levels, and that kind of gives me
no, that's true. But that's the main, or the one of the times, or actually that's probably the only time, or most of the time anyway. It's like when I just get a straight move up and there's no clear support resistance levels, and Fibonacci is very useful. And this is not the case right here. But there, like when you the where you just drawn that little triangle, the horizontal line, that's that's that resistance area there. Yeah. So you broke out of that. That's very bullish.
Speaking of cup and handles.
Yeah. Yes. So that is but just the horizontal line, one of my favorite indicators. You can see that you broke out of that resistance level, and I can't really see where price action is right now. But is it like right on the support level?
Yeah.
Is that where it is?
Yeah.
Is that right? See, I would be, for me anyway, I'd be kind of very tempted to look at an entry. But that's the 1 hour time frame. Ideally, I would like to see something like that on on a longer time frame.
Yeah, it's a bit. As you can see, the ambiguity of this range is kind of reflected in the order blocks. and you can see the buyers here, sellers here. This space is kind of this space is kind of just empty. Now the issue is, now the reason why I've drawn this on is this is a little bit janky, but it's a bit of a V really, honestly. But if you look at this as a cup and handle, where's the handle, right? So you always got to think about what is the downside, right? And what are the traders thinking, right? If they see a cup and handle, they'll be like, okay, we've tapped resistance and we haven't broken above it, which is great, which is helpful, right? But you know, a move back from Bitcoin, where does this go? Now we have the 50, we have the 200, and we have this pattern, a few layers to protect us, right? So we could come back down into here and then have a bounce again. So it's a bit of a risky trade. This this is it's bordering on a B and C. I'm going to put it as a B with a question mark, right? So that means I need to do more work, right? I just need to have a bit more of an assessment. So I might look at the RSI and I might set up a multi-time frame look to see what's happening and just get an idea, see if I can find some divergence. So this is the key, people. When you are looking for a trade, obviously we found opportunities, right? We've seen things that are potentially tradable, but there's also, I'm always looking at like, well, what happens if Bitcoin comes down, right? What happens, right? We'll lose this and then we're here, right? And then the bullish context is over. Everything is resistance again. So when I see that, when it's like, this is kind of the invalidation point potentially, it's I'm a bit concerned about entering. So I want to do a bit more research to figure out exactly what I'm going to do. Now, obviously this area here would be a great place to enter, no brainer, right? Because we've had this kind of this area where we've been trying to find ourselves, find our feet, and we've broken back up, and there's been lots of bounces from this area previously. So it might be just a waiting game, and then if it's a waiting game, then that might be a B setup too. But again, I'm losing confidence if it comes down here. So when we're having problems finding the trade, I'm going to call it, actually, I'm going to call it a C. Okay, now I might do more work on this and then move it back to a B.
You be so kind, Paul, to just show the daily time frame, if you don't mind. Just out of curiosity. Oh, look. C.
Yeah.
C.
See?
Yeah.
See.
You see, you got on the daily there, you've got right at the bottom there. Yeah, I can't see that. I'm zooming in, but that's also a double bottom with. You see that you've got three lower points there on the daily. You've got that low, then you made a lower low, and then you made a lower low, and then the last low, the lowest low there, and then you went up there, but it came back down, and then it formed like, okay, the second V of the W, if you will, is much higher, but then it broke out. Do you see that?
Yeah. I think
so.
It's. I mean, this is that low is, if you ignore the opening, the launch, this is a low. This is the lowest it's been, right? This dip. Now the whole market's like this though, so this is not reflective of ID. And when you've got these, you know, a lot of the altcoins have been pushed down into this area. Now, if Bitcoin continues on its way and we start to see some people entering risk assets again, then this will continue upwards. But when you look on the higher time frames, of course, you know, we look at the price action and we can't quite see a trade. We label it C, we zoom out, we kind of see why, because we've got this, it's just retesting this zone. So therefore, there's an intraday trade there, right? That's fine, right? Because this may not be done with a retest, right? We've got plenty of wicks come up here for sure, right? So it could still be a short-term trade, but you've got to be really aware of what you're dealing with. And this is a downtrend, right? So it probably have to be an intraday trade. I think ignore this target potentially until we've maybe come up here. And so if you see this move here, right? Imagine this move, it comes up here and then you're looking to come in at support, right? And then you've got all of this noise that we're on our way, right? And I think that's what you need to see. So I think I was probably right with the C categorization, but so there is a trade here, right? I mean, a really straightforward intraday trade here would be just from here to here. That's it, just done, just in this range, right? Just over to capitalize it on the weekend. There's a bit of support. People will be looking at this, but again, it's beyond. I think this target, which I originally put when I was doing it, is probably a bit nonsense, to be fair, until we see something else. So But that's how I essentially will do it, right? And unfortunately, a lot of the planning and setups I do, I mean, you look at the top altcoin picks videos we release on PrimeX, and we look at all these setups I bring. You got to understand that if I bring 4 setups, which like have been playing out and have been successful with like cookie and all that kind of stuff, there's another 20 which I've looked at, which I know, right, which are just not good, right? And you need to, in order to, because people ask me, there's someone in the comments on YouTube the other day said, where do you find these setups? And I'm like, through hard work and discovery. And you bring up charts, you set them up, you look at them, and then, but this could turn into a B trade, right? It could turn into a B trade with different context. And you have that's why I have so many charts open, right? Because it's constantly changing all the time, and I need to keep checking in on them. But right now, this whole thing about C, B, and A, right? It can save you capital, right? Because it forces you to realize that, you know what? Why would I be trading a subpar setup? I mean, just think, why am I trading a subpar setup? Why, right? And that just means you have to find it, right? So go and dig, find the right setup and trade it, which means maybe you're only trading once every week or once every 2 weeks, depending on what you're doing. And that's fine, right? Because why most traders who are new to the market and they get a little bit of skill set behind them, all they do is overtrade, right? They just overtrade constantly, and then eventually there'll be a cascade of, they'll get stopped out, they get frustrated, they'll have 6 or 7 bad trades in a row, and then it just messes them up, right? And it just loses any confidence or ability they had in their own mind. Whereas if they were much more selective from the get-go, right, they would have the profits to back it up, the success rate to back it up, and a calmer emotional state, because you're trading less and you know exactly what you're looking for. And I think that's the key. Know what you're looking for, right? And
yes.
It's not here. I'm not seeing it here.
Amen, Paul. Amen. That's true. Like I think we spoke about this before in one of the sessions. I don't know which one. Like a lot of these, even like with trading psychology, remember, people feel that they don't have the discipline, or they keep doing the wrong things. It's really about they're not 100% sure what exactly they should be looking for. What exactly does a good setup look like? If you ask someone to show me what a very good setup looks like.
This is what a very good setup looks like, right?
Yeah.
And this is, I've told some of my students to print this out, because this is the best setup I've seen in a couple of months, right? Very unfortunate that I was charting it while we were streaming as opposed to trading it, but this is an A setup, and this is a great example of what you need to look for. And if you know what you're looking for, it makes it so much easier. It's like your dog, you're trying to get a dog to try and find a truffle or something, I don't know, right? You've got to give it a scent of it. You've got to give it a scent. It needs to know what it's looking for, right? You've got to train it, right? And it needs to know what it's looking for. Yeah. So Lever, is an A setup. It's one of the few A setups we've seen in this tumultuous state. Now, it's obviously a low cap. So this is, again, just to go through it. Downtrend, pretty scary, but it gave us this foundation. It had a double bottom here. Then we formed a larger double bottom, clear foundation with a higher low. We didn't retrace to these dips again. We then retook a moving average, put in a higher high, 3 levels up, right, which allows the price action to retrace to a point above this previous range quite naturally, right? We then have we take the moving averages, we have the golden cross, we are then in a tradable pattern, which affords us then 2 higher lows following it, confirming a complete change in the trend, and then it ends up in a triangle pattern, which is completely tradable, right? And then you get a breakout, everyone is desperate for a good trading action, they all see it and they jump in, right? And the way you could have facilitated this entry, just to be clear, look, there is 3 ways to buy the breakout. Now, we were talking about yesterday about low caps and how to trade them, and where you just kind of, if you see a candle body close, sometimes you want to be quite aggressive and just enter as close to support as you can get and don't wait for the retest, right? Because it's a bit ambiguous. But in this case, the best strategy would have been arguably to wait for the third way to buy the breakout, the safest way to buy the breakout, which is to wait for the swing high, a break above the swing high following the breakout. And if you had bought this candle on this candle body close, right, which is just this range, that's perfect, right? You're in and you're away. You would have been in massive profit in a matter of an hour or so, right? So we're talking about, this is a perfect setup, but then again, how do you trade it? It's all very good in retrospect. So you've also got to be aware that you do treat an A setup the same way for a large cap as you do a low cap. No, you don't, right? So an A setup pattern like this, you would wait for a more solid retest following a breakout, because it can't go this high. So Ethereum has to come up and then come down. So you can just do a buy the retest strategy. But for a low cap, you've got to be more aggressive or you'll miss moves, right? But the reality is that if I was trading this, I most likely in these conditions would have took profits here or here. So the only way I would have ever made it up here would be if I had fell asleep at my desk without putting a take profit price point. Right? That's the only way. So,
yeah.
But in a bullish context, and you'll see a lot of this, if the bull run does take off and you get altcoin season, then you'll see loads of these. And when the market is really going, and you've got like Bitcoin dominance in a downtrend, so you've got the momentum, the flow of the river in your favor, then you can, in crypto, just enter a low cap with a very small amount of money and then just let it ride and see what happens. And that's how you make the money. But the problem is, I would not have done that here. If I got into it, I would have taken profits at the very latest here, which is still a great trade. It's still a really good trade. I mean, it's 20%, 25%, but the market conditions weren't allowing me to be so liberal with my take profit point, just to see where it goes, right? Because it's just not how I trade. The money's made in the middle for me. But there is a tactic to do that. But unfortunately, this is not the right conditions to do it, and we would have missed it. But for those of you who accidentally tripped into this trade and then just went away and came back, then congratulations. And this is actually a setup to trade now as well, because we've had a very, very healthy retrace back into this golden pocket, right, between the 618 and the 0.5. So this would be a good place to potentially enter for a continuation. Now, do you need to see something else? Because we've got this, there is a wedge here of sorts, which is really great to trade. I love trading wedges. So there's a couple of ways to trade this as well. Now, you can wait for a breakout and then a retest of this area, which would be the safest, right? Get bullish confirmation, right? And maybe in a higher high, which shows that this is over, and then come in here and then see if it comes up again. That's one tactic. The other tactic would be you've got this level below. If you get divergence popping up as we approach this area, then you could front run the breakout, right? But of course, we're talking very small positions for a low cap like this, so it's just it's canary in the coal mine sort of thing. You have to expect you're gonna lose it, but that's the approach. And the reason why this is a good opportunity, one, because it's in a great place in terms of the math, it's in a good place in terms of confluence. Plus, we've had a good retrace, right? A good percentage retrace compared to the run up, which is what we need to see. So it's a 100% run up. And we've had a nice retrace of about 35%, which is good, right, for a bullish context. That's enough. So there's a couple of options. My mentor would have front run this with the divergence here, maybe in this pocket. I wouldn't have done that, but I would trade on the other side of it. I'll wait for a breakout, and then I'll come in either at this level or in the golden pocket. So there's an opportunity for lever here as well. But just be. And again, we've now got areas for a price target. So again, I was not wait up here. If I was coming in here, this would maybe be my target. But remember, what's this? Resistance still. So, maybe look to capitalize on the momentum in this range, maybe. But I wouldn't necessarily think, ooh, yay, lever's going to do another 100%, right? It's not, the market conditions aren't there. But you might see people coming in to try and hope that will happen. And instead of being like them and just buying in here and hoping for the best, you would actually say, you know what, moving average is here, resistance is overhead. I'm going to capitalize on any bullish momentum people joining into this trade because they want to see this again, but I'm not going to wait. I'm going to get out here and I'm going to take my nice conservative 10%. And that's how you would play it, maybe.
Yeah. Could you just zoom back on that chart? I just want to see how,
zoom out.
Like go back in time. So I just want to see how significant that drop was, just to put it.
So let me just
just out of curiosity, was it like a?
I mean,
okay.
It's highly volatile. Right? I mean that you say 100% is amazing, but in the context of this token, it's nothing. And again, look, we are in negative price discovery, right?
Yeah.
So context is everything. Which isn't particularly healthy, but it was a lovely setup. And look at this volume, like more volume than we've ever seen, right? And
Yeah, that's a lot.
that's a signal.
Damn, that's a lot. Yeah.
Go with the crowd, right? But this also highlights the dangers at the moment in the altcoin market, right? Don't get carried away, right? Just the daily chart for altcoins at the moment can be a healthy splash of cold water, right? I don't think you're going to see many good setups on the daily, with the exception perhaps of Gala, right? Which is doing really nicely. This is a nice setup. This was a top altcoin pick for this week. This is more of a long-term thing, right? This is definitely a multi-week trade. I've traded Gala this way before, but we did enter negative price discovery locally, but now we've retake that level. So this is a great place to be in. But you look at Lever, and even though it's a great trade, this is not the picture, right? That's not the picture for this trade. So this is completely different setup for Gala, whereas this is more set up for a long-term buy. And obviously, if we were to come in at support and be patient, and that's like 365% to the previous high, which we had in December. So, that's the ticket, right? Intraday stuff, long-term stuff, have a combination going. It can be also less stressful when you've got, say, a couple of midterm holds, which are easy to manage, and then you've only got maybe one intraday a week, perhaps. That's the way you should approach it. Because was saying to me the start of this week, she's getting so overwhelmed with trying to trade and trying to get everything in order. She has a family, and I said the same thing. I just said, look, I am so busy right now, and I'm back.
Can't talk to you.
No. Yeah, sorry, I can't do that. But I just to empathize with them, because you've got two types of traders or coaches or whatever. You've got the ones which present themselves as godlike, right? And I don't think that's ever helpful from an educational point of view to people. Now, we're here trying to educate people. Now, have I had bad trades? Yeah, right. Do I get overwhelmed with work or what I'm doing, and do I back off trading or even stop trading? Yeah, I do, because it's part of the process. Because right now I've been, I'm focusing a lot of supporting, you guys who are paying attention and creating content for you guys, right? But that doesn't afford me then as much opportunities to trade. So, and this is the thing. So I will realize I'm busy, and I'll just say, you know what, A setups only, which takes the pressure off, right? Because I'm just like, and I said this to her, I'm like, if you're feeling this way, you can stop trading for a week. And if you can actually, and she's like, oh, I can't do that. And I says, right, if you are saying to yourself that you can't stop trading, you need to stop trading, right? That's the first thing. The second thing is, by being more selective, you can back off. You can say, you know what, I haven't found an A setup today, so I'm going to go to the park with my family and I'm going to feel good about it, right? Because there's nothing to trade, right? And this is how you need to approach it, right? You don't need to be trading every day. You don't need to be trading every week, right? You want to be improving, and that's the only thing that matters. The only thing, right? And taking a break, important.
I agree, but when I used to, as you probably know, I don't really do coaching anymore. But when I used to work with people with that problem, I just make them focus on longer time frames, and to swing trade and to be in a trade for like a week, and then they feel kind of they're in there. They're doing something. They don't do anything, but they've got that trade that's active. Compared to smaller time frames. Smaller time frames, if you're not 100% clear on exactly what you're supposed to be doing, oh man, like that, you're going to overtrade. You're going to do, everything, all the problems that people struggle with. That's where it lies, in the short time frames. But if you focus, the longer time frames, and you say, okay, it could pull back, it could go up. If you say to someone, well, just take the trade now, you're going to have to trade much smaller, right? Your stop loss is way down here, right? And then just let it play out. So the probability is very high for it to go higher. And it really helps. Well, it really helped them, just to be in a trade, but not just like any trade, still in a high probability setup, something that makes sense and all of that. But they struggle with their timing, or they go to the 5 minute to time the entry, or 15 minute, and they just keep getting stopped out. But they are right on the bias, and they feel like they're going to miss out on something right now. Just trade much smaller, look at a longer time frame, and it does kind of solve the problem to a large degree.
I mean, let me just show you this. It's called the Wall Street cheat sheet. Just
The Wall Street cheat sheet.
the Wall Street cheat sheet. It's not letting me share. That's a bit weird. Hang on a minute. Present. I almost click the Leave Studio button. Then that would have been good. It would have been by yourself. You might be so,
I'll just say we're waiting for Paul, and I'll put some music on. Yeah.
can you see this? Okay.
Yeah. What's that? Oh, that's the Wall Street cheat sheet.
Now, the reason why I'm not bringing this up to just kind of work through just generally all the emotions, but when you're trading volatile assets, right, or any assets, but crypto is very volatile. Your emotions are even more volatile, right? And look at all of these emotions which trading gives us: disbelief, hope, optimism, belief, thrill, euphoria, complacency, anxiety, denial, panic, disbelief, capitulation, anger, depression. Like, how do you manage all of this, right? How do you manage it? It is not by going hard and not stopping.
Yeah.
It's just not, right? You have to understand that how you're feeling. You just have to. And obviously it's easy to say, if you're enacting a trade based on an emotion as opposed to a plan, then don't do it. But your emotions don't hear that, right? That's a logical concept, right?
Yeah.
Which don't listen to. So looking at charts like this just remind you of the emotions which you're going to encounter when you're trading. And there's a lot of emotions which we haven't even spoken about, like the frustration of not finding a trade, right? So this is just the market cycle, the emotions of a single market cycle. And it's you have to put in a plan. So you might have a plan for journaling. You might have a plan for enacting trades. You might have a system which is as refined as Michael's, as an example, right? You might have all of that in the right place, right? You might have a multi-monitor setup, right? You might have a whiteboard to track everything, right? You might have a spreadsheet. But you have done nothing in order for your mental health, for your emotional state, and for sustained, and for you to be a good trader in a sustained way, because you're going to get burned out eventually. So for me, it's yoga. For me, it's taking time off. For me, it's walking in the park, in green spaces, right? And knowing when I need to get out. For other people, it'll be something different, right? It might be, I don't know, go-karting, right? Or golf, as our Igor wants to take up in his retirement. But it's a neglected thing. And a lot of traders, you will see this as well. People, coming to you asking you for support. A lot of the times they're quite frantic, right?
Yeah.
I mean, we don't need to mention the person we referred to about that serious Solana loss a couple of weeks ago, but frantic. And I've had one woman, unfortunately, from the United States, who was so lovely. She had been scammed, right? She didn't know much about crypto, and she'd been scammed out of her life savings, right, on the promise of riches, right, which is the ugly side of crypto, right? And she came to me desperate to try and make it back. And the reality she didn't like, because there is no way to make it back overnight, right? If you want to learn how to trade, then you of course have to move on from how you're feeling right now, right? There's just no way. Even if, say, I could teach you in 2 hours how to become a profitable trader, use a bit of leverage and make some money to start recovering your savings, you're not in a position to trade, because you're absolutely devastated, right? And you have to recognize whatever you're doing in your life, whatever the situation is. Like, if you have some bad news, don't trade that day, please. Just don't trade that day, right? You're not feeling well, don't trade that day, right? And this is the thing, right? No, the best traders are not standing in front of a Lamborghini, right, talking to a camera, right? They're not. They're just people like me and you who have practiced and learned and developed a skill and are continuing to learn and develop their skills. But ultimately, and this is the other point, they have learned to control their emotions and their actions, right? And they look after themselves with mindfulness and whatever you need to do, right? Now, that could be going boxing, right? That could just be lying down in the park or reading a book, whatever it is, but it's a neglected thing. And if you want to cheat, you know, Wall Street, right, or cheat the market, then you have to pay attention to this. And it's all a bit new age for sure, right? You know, boomers are going to look at me and go, "Oh my God, you're not a man, you're a little girl." It's like, but, and that's fine, I'll accept it. But I'm the one who's making money and you're not.
Yeah, no, exactly right. The thing about emotions is it's so powerful. It's so powerful. So you need to, when you're not in the zone, you really need to think about, like, what can I do to make sure I don't get myself in that zone? Because in that zone, your critical decision making becomes paralyzed. You just don't make good decisions when you're in that emotional state. So you need to come up with a routine or some sort of plan to make sure you don't even go there. Okay, because if you're in that state, you're going to keep repeating the same mistakes over and over, and you're going to think there's something wrong with you, and you're going to go and see someone, and they won't be able to help you. You're going to have to sort it out yourself. But yeah, it's a very, very, but the two biggest ones we spoke about, you know, repeating myself, but it is knowing exactly what you are looking for in a setup. What does a good setup look like? And then also, don't attach yourself to the outcome of the trade, right? Like, if you are attached to the outcome of the trade, because you will have losses.
Yeah.
You will have losses. So if you're going to attach yourself to the outcome of the trade, you're going to get yourself back into that emotional state. And then you probably want to take another trade because you want to make money here, right? You are attached to the reward side of things and not the process. So that is definitely something that many, if not most, well, I'll go as far as to say, if not all traders go through, especially in the beginning. You know, it is you need multiple skill sets to trade successfully. It's not just knowing where to draw your horizontal lines, even though that's a very important skill.
It's very important.
But it's the easiest one, but still.
I mean, let me to really maybe. I mean, this is a multifaceted conversation, and with crypto, the biggest obstacle we have is to orientate people correctly to the market because they have a perception of it. So if I'll just share my screen just to show you the kind of the chaos which people have to deal with. So this is, look, right? You see this thumbnail from a YouTube video, right?
Yeah.
This is the crypto space. It's shock and awe. It's, oh my God, you need to buy this. It's promoting FOMO. It's like, oh my God, you're going to miss out. All that kind of stuff. This is what it all looks like, you know. And I obviously do top altcoin picks, but they're TA. We're not paid by a project to promote them. They're great trading opportunities. But this is the space. But this ultimately is the reality of the space. This unsexy, unshiny
yeah,
altcoin research checklist, right? Is, you know,
yeah,
and this is it, right? And if YouTubers were talking about things like this, people would be more profitable. Like, idea, has it got a growth narrative? Is it disruptive? How crowded is the space, right? And then, you know, half an hour later, we're starting to talk about price, you know, and this is the game. All of these things we have to kind of put in our heads and work our way through, like token, look at distribution, investing. I mean, if I was to go on a YouTube channel right now and just read through this, no one's going to click on it. Right?
Yeah, but yeah,
they did pay attention to it, they'd be better off.
No, absolutely. But you know why they create those things? Because it's all about, well, you I don't even have to tell you why. It's all about click-through rate and getting the views and all of that. It's not really about the quality of the content. It's usually just a bunch of hyped up nonsense. You know, telling you how easy it is. But the reality is not many people make it, right? So that's why they do that. You know what? Like now that you show the YouTube videos, like the other day, I was like, one of these, you know, like some of the things you regret in life. I actually forgot about it. But this was I saw, or someone actually sent it to me. It's like, look what I found. And it was a YouTube video that I posted on Fibonacci levels, believe it or not, 17 years ago.
Wow.
3 years after the very first YouTube was ever posted. Me at the Zoo, it was called. That's the first YouTube video that was ever posted. Me at the Zoo? Yeah, Me at the Zoo or Me at the Park. That's the title of the first YouTube video ever. So yeah, 3 years after that, and it had like 6,500 views. I just didn't think anything of it. Like, it was just like a kind of bit of fun. I'm like, damn! Imagine I just kept making videos, because yeah. But anyway,
I mean, it's difficult. Hi Lola, good to thanks.
Hi Lola.
It's yeah. So obviously, you know, what we're doing on Prime X at the moment, it's just that we're trying to. I've run my own YouTube channel as an experiment a couple of last year, just to try and orientate myself to the space, and it's really difficult. But it's difficult to present truthful, honest, helpful content, which isn't a scam, which isn't paid for by other projects, which is just, this is a good setup, this is why, based on established TA, these are the opportunities, and managing to sell it to people in the same way that the trash, you know, it gets sold to people, because they have a perception. And that's the challenge. And what we're trying to do with Ola Prime X is we're trying to create a nice, unique space where you have the sort of quality content that these live streams are presenting with yourself and all the other amazing coaches, that level of insight, but packaging it in a way which is just about palatable to the people who will also be looking at, say, Mr. Beast, right, and getting something from it. And that's the challenge, because I was talking about the UK government in the crypto news, which was out today. I was talking about the UK government's attempt to craft some crypto regulation, and so far the UK government, along with a lot of countries, are just their solution to crypto is to ring fence it, make it difficult to access, and then to hold your hand while you're doing it, right? And so on my Coinbase, I can't get rid of all the pop-ups telling me, you know, it is high risk, and I'm like, yeah, you told me yesterday, and you told me the day before, and I get it, and I'm still here. But the issue is, of course, the solution, I think, to governments concerned about, I mean, look, crypto was created to essentially, as a concept, to empower me and you, the people, not the bankers, with our own money. That's the whole idea, right? Now, that's all very pie in the sky, but the issue is if governments are trying to get crypto to essentially just be a modern banking system, a modern monetary system, right, then there's going to be issues there, right? Because it takes away from the benefits of what crypto is. But they obviously don't want that power to be with the people, of course. Now, obviously, we don't want fraud. We don't want anything terrorism or anything like created by that. But it's a difficult concept. But for me, as a former teacher, education is always the answer to these problems. And what I would like to see from any country, any government, is that here is our crypto policy. Here is our ad campaign educating everybody on the space. Right. And these are the information you can go to. We have these advocates which are operating in the space, and you can go to them. And this is how you construct a safe space with good policy which protects everybody. Because the reality is, when we're talking about these setups, right, there's still so many people which still don't fully understand how to interact with it safely, despite the kind of the stuff we're talking about. So it's an uphill struggle. But I genuinely believe that here at Ola Prime X or other places, there's some people doing some good work in other spaces as well. If we can get the right balance between hooking people in, but making sure we respect them and we protect them with our approach, right? We welcome them into our umbrella and we don't give them any BS. We give them the reality, the sad reality sometimes of crypto. You saw Mantra, right? You saw that crash, right? And just speak to them honestly about it. Then I think we've got a great marketplace for people to enter. But it needs guys like you. It needs guys like, Igor.
You?
It needs me, everybody, right, in the space to be less this and more, here's the pen, make some notes, right? And I think because that's the reality of the space, ultimately.
Yeah. Yeah, it's very, very difficult because the problem is most people have just this perception that trading is easy money, right? So they're looking for content that matches that perception. They're not interested in anything else. So that I think, people, I've heard people make so much money, so I'm going to look for something where say, yeah, it is easy. Yeah, I thought it was easy. Let me watch this video, right? So that's what they're looking for, but it's not something you're gonna do to do just extra bit of money. You're gonna have to put in the effort. It is a skill, just like anything else. I mean, everything else. Like even if you want to become a barber, I'm sure there's like a, I don't know, 6-month training course or whatever it is. You need to get trained on, and you need to understand exactly what you're doing. And trading is very complicated compared to most other professions. It just is, right? And it's that there's not many other professions where your emotions comes into play. Well, you can be seriously pissed off and still write a program if you're a programmer, right?
Yeah.
And still write the program.
Revenge app.
But you can still go to the office and do your job, and you can be in a bad mood and right. But
you can't trade when you're in that
you can't do that. So that's why it falls into a completely different category, and it's definitely more difficult. So people don't realize that, but yeah, like once you have been struggling for a long time, because like back then when I used to do coaching, I would typically work with people that's been training for 5 years and more. Not beginners. It's people who already know everything. You can't, you don't have to explain to them what a candlestick is and so on. It's people who already they know already everything, right? And in some cases, they know more than me, like in certain, like, indicators and how to read them and all that. They just can't put it together. They just can't make it work. So, and that's the issue when you try to reach out to people, like say on the YouTube space, like, like you just mentioned about, we need to put out, we need to package it in a certain way. It's very, very difficult because people just don't, their perception is just on the completely different, on the opposite spectrum of what trading is. Sorry.
Yeah, I mean, on the Prime X, I mean, we're releasing like 4 short videos a week at the moment, which is a pretty frenetic pace. But it's really important because, they're educational. So, 3 tips and everything, all that kind of stuff. It's talking about that kind of creating a, accessible content in the shape of what they're used to, but making sure the words are different. Right. And I did a short on render token just the other day. I filmed it last week. And it might be coming out today or tomorrow. I don't know. And when I was doing it, I was like, I feel like I'm selling this, right? Like I'm promoting it, right? When I was just talking about the technology, because it's a huge use case, right? I wasn't promoting the token. I'm just talking about, and I know we're planning on doing the same to educate people about the different tokens, right? But if I was talking about Pepe, right, half the conversation, if I was promoting that token, would be very careful, right? But if you imagine another YouTuber and that lever trade, right? You've heard me say, if I had traded this, I would have taken profits here, right? The splash of cold water, right? Because that's the reality of it, right? The only way you could have traded that successfully is if you accidentally did it, right? It's the only way, right? And
that's
another
true.
YouTuber would be like, look at me, look what I did. 100%. Look at it.
Dude, right? You remind me of this guy, right? He sells this indicator on TradingView every single day. I don't know how he came across me. Oh, actually, I know, because I had a problem with this is a while ago on TradeEvade, and there was a problem. The feed just shut off, and I couldn't get out of the trade. And I was looking for some information on it, and this guy just happened to post a video on that. So that's like I watched the video, and then from there, YouTube just kind of kept sending me stuff. Oh man! But anyway, this guy is every single day he posts 6 winners, no losses, 100% success rate every day, Monday to Friday, right? And he sells this indicator, and he sells a lot. I think he's sold probably, I can't remember the last count. I think close to 6,000 or something like that at $99 each. Every day he posts this video, and then people, when you look at the video, and people will say, this is not working, this is BS and so on, he'll just not delete it. You've got that option, what's it called, hide user or something. Yeah, and then he just gets rid of them. And then more people finds it keeps, there's always like new people finding his video, and he keeps selling it. There was one comment of a guy saying, This is really scary. I'm 63. I'm a pensioner. I'm losing a lot of money with this thing. And he just deleted the comment. Carries on. Next day, posts another video. 6 winners, no losses. I'm like, ugh. Like, you got to be a special type of psychopath to just don't give a damn about that. That's
well, look, this is to say, if they're selling something, right? So so let's just break it down. What am I selling to? What am I selling to the people who watch the Ola Prime X content? I'm trying to sell your future,
education,
right? And education, right?
Yeah.
That I am not trying to sell a sure thing, right? In the top altcoin picks, we talk about, like, you know, this is Bitcoin dependent, right? These are the options, because, you know, if the market changes, this option will be invalidated, and this is the conversation. So it is an uphill battle, but we have to be very careful. And perhaps we should do a podcast or something on this as well, because it might be quite helpful. But yeah, good conversation, I think. Hopefully people paying attention.
Yeah, I think, sadly, our time has come to an end. Lola, Robert, and everybody else watching, thank you very much for watching. The good news, to end the conversation on a good note, it's weekend. So have a great weekend. And yeah, Paul, I'll see you, and the viewers will see you next week.
All right. Have a good weekend, everyone. Cheers, Jannie.
Cheers for that. Cheers. Bye-bye. Michael.
Amen. Can you hear me okay?
Hello?
I feel like my sound is off. Can you hear me okay?
Yeah, I can hear you perfectly. Yeah. Oh, I think everything is okay. How are you doing?
Can you hear me?
Yeah, I can hear you, Michael. I can hear you perfect. Hello? No, I can. I think you have an issue. Could you unmute yourself?
Can you hear me now?
Yeah.
Okay. I don't know what that was.
That's fine. How are you doing?
I'm doing great. Happy Friday. Happy NFP Friday at that.
Happy NFP Friday. How was your day? Tell me.
Flat. I was too scared to do anything today.
Okay.
Yeah, I didn't do anything at all. I just watched it for a quick moment. Jumped off shortly afterwards, to be honest. I'm not a fan of trading NFP at all. Some of my biggest losses, me giving back my week's gains, sometimes my month's gain have come on the heels of NFP Friday.
Yeah, and like NFP Friday in general, in my opinion, for me, it's a tricky day. Yes. I took a couple of trades, but it's just in some evals, and that's it. No big thing, no big things. So you were right. Like for me also, I had bad memories about Friday, and like during the week you have the weekend, like you have a bad weekend. So and you
got people ask you okay? Yeah. I'm fine. But really, you're thinking about what happened.
Yeah, and for me, like the moment I decide to not trade on Fridays, like I saw like a big change on my PNL.
Yep.
And just it works fine without Fridays, but.
And I'll be honest, I'll still trade Mondays and Fridays. Like I'm just a little bit more cautious. I'm not going like in fully on those days. But NFP Friday, hell no. Like
Yeah, it's tough. It's tough a little bit, and for me also, like the psychology behind it, like trading on Friday. If you are in a, like, let's say 1% or 2% up for the week, so you come to Friday and you want to hit this 5%, so you have a good weekend. So and the same thing for someone like let's say negative week, let's say -2, -3, and on Friday try to get it back. So it's always tricky. There is always this psychological aspect of you are not fully, let's say, trading in the zone and in the right mindset, because you are trying to make a good win, or you are trying to finish the week strong, and it's tricky. But
and I agree with that too. But what's even worse is, right, like when you have those weeks, and then you come, let's say whatever happens on Friday, you try to get it back or you lose it, and you're thinking about it all weekend. It kind of, if you're not at a high level, right, and there mentally, it affects you the following week, right? That Monday, Tuesday coming in, you still got this chip on your shoulder, so to speak, to try to right your wrongs from last week, right? Like it's a bad spiral of events that happens on.
And you are totally right. Like you get a bad Friday, and then you take this bad day with you to the next week,
And even like during the weekend, you think like your approach is not working or something, and you try to change, and you come back on Monday with those changes that you thought that it's a good thing to do. And then you start Monday even with different approach of execution, and then you start losing. And then maybe if you are a little bit smart, you understand that those changes, it's not good to make those changes, and then you came back. It's rough. And for me, I have this cycle like for a couple of months. Like I trade Friday, and for me, like Friday, I lose, and I take this with me to the weekend, and I take it with me to the Monday, and on the weekend I try to put in work, try to change things, and I thought that I am smart. I start to change. I found the solution. I will increase, stop, decrease this, and I change, let's say, all my approach. And on Monday I'm starting, let's say, new execution approach. And then it went bad. But you are totally right. Like, you take it with you to the following week. So also,
And then you got to think about this too, right? After we just went through all of that, the worst part is you take with that to you next week, and you might have a bad Monday, Tuesday, and now you're trying to get all of that back. And then next thing you know, Friday comes around again, and it's the same cycle of doom. It sucks. Absolutely sucks. So you got to really, really, really be like level-headed, doing this. Because obviously, like today, right? Let's jump into it. Because I saw AF set up today. Remember, I took it yesterday. And I'm like, this is close. I was like, you know what? This is close enough. I can take this. And then let me get my screen going here.
Hello, Robert. How are you doing?
Hey, Robert, what's going on? Right. So AF, right? We talked about this yesterday. Mind you, remember yesterday I was looking for this exact move, right? So once we saw this, and I'm glad everybody shows up like this, because anyone who's been paying attention for any amount of time notice I say the same stuff. Like everything is the same. I don't switch my approach up hardly ever, except that one day on S&P 500 with me, you, and Sam. That was the one time in like forever that I switched it up, and I luckily didn't. I came out unscathed that day, but typically I don't do that. Right? 5200 cross. We know we're in level 2, looking for M's, W's off the 200 EMA. Right? So as always, I will always go with this. So yesterday we seen this. We came in. We talked about this move. Right? We had this funny down, up, down, funny W. Right? Pretty ugly, to be honest. This wasn't, but cool. No worries at all. The next move comes in. We're expecting a bounce off this and going higher.
Yeah.
Right? Now, did this go the full way? Of course it didn't. I was expecting it to go the full way yesterday here. But what happened? Market makers are sneaky, guys. What do? They do this whole move where, because we took this on a 15-minute as my ID 50 move, right? So we took this yesterday. We thought this would go up. Luckily, I had my stops at break even. Let me take this off. So I didn't take the hit on this. Like, it took me out over here at break even. I actually didn't even take anything off this move. I moved it early because it was a late trade, and it really didn't go as far as I would have wanted it to go. Not just yet. Right? It actually came really, really close, I guess. But either way, I didn't take anything off this. It was a smaller move. But what happened? It makes this funky move after that, where it kind of comes down, goes back up, looks like it's going to go, and it doesn't. Right? Super sneaky. And then what happens in Asia session? And mind you, you can take this in Asia because this is AUDCHF. So it makes sense to take this in Asia. But they pulled the move back, and they made the move in Asia with this big old crazy candle, which literally, even if you would have seen this, it's ridiculous how this was. Did this candle close above the 13? Technically, it did. So you made the money in 15 minutes, like tops, right? In 15 minutes, you was at break even. 30 minutes, you was at TP. Crazy the way they did this move yesterday. right? So I seen this happen yesterday, but I left it alone. Again, Thursday close, going to the NFP Friday. I just stay away from stuff like this. I just literally have way too many bad memories of this not going the right way. Right. And you don't get over $1 million in capital, through prop firms by taking all these types of trades. You acquire that by being patient, right? Like super patient. And just knowing that this is not a pristine setup, right? Like, I like to correlate it to, you wouldn't talk to every chick in the club, right? You would probably only talk to the cute ones, right? Like, this one isn't cute. You don't want to talk to this one. Like, just leave this one alone, right? You want something nice, clear, and simple, right? So, this I was not feeling this. But long story short, if you look at the 1 hour chart, obviously they did exactly what we anticipated them doing. 5,200 cross, half a bat structure off the 200 EMA. The bounce off of this 50 EMA, yes, they wicked it up and down, but the target was at 800 EMA, which they hit about an hour ago, right? So very wicky move, but this was predicted. Like we expected this. Once price actually closed, right, from here, the next target was here. Now, did that happen the way you anticipated it? No, it didn't, right? If you were a swing trader, would you have popped on this move? Actually, you would have, right? You would have had let me zoom in just a bit. Let's scoot this over, right? So you would have jumped in here. Stops would have been below this swing point. TP would have been this 800 EMA, right? Nice 2.30. Nice. And the cool thing about this is this actually would have, once you took it, you didn't really experience much drawdown. Yeah, you were up, you were down, you were up, and then you were never down again. So a lot of back and forth. Actually, this little wick right here, right? They did have a wick coming into this to take you negatively for a second. So a little bit of drawdown, but not too much at all, right? So this is what I mean when I say sometimes, if you want to swing some of these moves, it's not a bad idea. I just don't do it. Right? I like to be in and out. Like, I don't want to pay swap. I don't want to risk, getting stopped out at the session changeover. I don't want to risk any of that. So, but this was the overall move that we were looking for, and it did go to it. Now, if you would have held on for all of this, that's a whole different story, because literally you would have took this trade at 7, right? And then you didn't hit it until the next day at 12. So that's a long time to hold on to something. Now, if you were going into this setup, based purely off structure, you would have never closed it. Maybe you would have closed it here, because we did have this red candle that closed below the 13, which was funky, right? Because right after that, you had this huge green candle that popped right back up. So that would have pissed you off if you took it, right? But that's what you deal with on NFP Thursday. It's moves like this, right? So not the prettiest of them all, but it was there. Let's get into GU and GJ since I'm already here. These two, as we've been speaking about, remember I said I'm gonna leave this here for tomorrow, which will be today. And look at that, right? This is what I mean, guys, when I say it's the pattern, right? The cycle, the cycle. What's that?
Yeah, we got the double top or the.
Yep.
Yeah.
Now the only thing that we don't have is this isn't ready yet, because remember we need the reload. So we need the market baseline to come up above the static, right? It needs to look more like this. The market baseline is still below the static right now, right? Remember, this is the static 50. This is below it. We want this to come up. Can I change the color on this?
Yeah.
Oh, I can. I didn't even know that. So let's make this yellow. Yeah, let's make that yellow, right? So we want something like this. We want the market baseline to do this. How it's all the way down here. We want it to come up and come back down below. That's how you know it's doing it. And this is what I mean also when I say the chart has to agree with the TDI. Right? So even though we have all of this, the market baseline, let me erase this because this is actually kind of ugly now. So we do have our 5,200 cross, right? We have that now. So now we know for sure that we're looking for M's off this 200 EMA, right? So 5,200 cross, we know we're in level 2, and we're looking for M's. Let's put M W's off the 200 EMA. Right. So once we get this, we know we're locked in. This pattern is officially locked. This is short, 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 short. Now, the crazy thing about this is, right, some traders will see this and they're like, oh, this is a nice double top, close above, close below, back above. Boom. This is not bad at all. Like, if you was to look at this purely off price action, great setup, great trade, I could see it. Right. But the only thing is, as I always say, is my TDI and my the TDI and the chart have to line up, right? So the only thing we're missing here is you see this market baseline is below this static, right? It's below it. So it needs to come back up, right? So we do need this to come up here. Because again, just to kind of give a little bit more context, right? When they hit this, when market makers come in and they hit these, this is why you got this action right above here. There's orders right above this 200 EMA that's long. So they want to activate those orders, right? They're already short, but the great gain more liquidity. They want to come up, hit these orders right here, going long, tag those traders on, close down, right? So once they see that, there's traders who are, one, trapped going long, and they might be considering closing it, right? And also you have traders that are now short right here. So they trap them on both sides. And that's all on the first leg. Then you got the second leg that comes up, right? Those traders that went long the first time have either one, closed their position because they're not confident in it anymore, or they added to their position. So they're in, even heavier, right? And then those traders that went short, same thing. They're either closing their position and going long, or they're doubling down right now, right? But it's a lot going on with this funky pattern move right here, right? But then when this closes back down, that definitely took out a lot of people on both sides. Traders who were long are now short, or they close their position altogether. And traders who were short probably are adding to their position. But the thing is, this isn't ready yet. There's no reload. On top of them activating orders on, going long on this side, the same thing happens on the TDI, right? As soon as price comes right here, right, the market baseline comes right here to go above the TDI, they're trapping traders going long. The same thing happens, right? So on top of them trapping them here, they need to get them over here too. Trap these traders going long because there's a lot of pending orders going long right here, right? And that's why I love that word reload. Like, they need to reload the books with this, right? Whatever terminology you want to use, but this is what they need to do. They need to get these traders, in here first, right? Let's scoot this up just a little bit. So yeah, this needs to happen first. So the actual move is not ready yet, like, because again, the market baseline is still below the static. And if you look at it, you can see it's slanting up. It wants to go up. And when this is going up like this, the price wants to do this too. So we want to see a move like this. Retest that again, and then go down here. Stops above here. Entries obviously close below the 13. Your target might be around here. It depends on what it looks like when it closes. All right, but let's say we did go with that. Right. And of course, TP needs to make sense. So we got a nice little 1 for 1.2, something like that. We can actually zoom this out just to see. Yeah, that's probably the next target, like target zone. I always, for the most part, target the ADR low or the ADR high. So that's pretty much using an ATR. And that's what we can expect them to kind of bounce off of, to be honest. Now, I wouldn't take my full position off there at that particular point because it could drop further than that. But bare minimum, right? Like you want to be at break even at that point. Even for myself, like if I took this trade, right, my break even point will be right here. Right? You want to be at break even right here. Because this is the next point that it probably will bounce off of.
What time we had this double top? Is it pre NFP or?
So NFP was at 8:30. So NFP was shortly after here. This green arrow that went up, it's in between this arrow and this green arrow. This wick down, red wick down, and I can put on I don't have the 30-minute on here, but how do I do that again? Let's see. I put on the 30-minute and do the 8:30. So 8:30 was right here, right? Mm-hmm. Right here is where NFP came in. Actually, it came in at 9:30. I'm sorry, 9:30. Wait, NFP is at 8:30. Yeah, 8:30. Yeah, I get my time zones mixed up. It's 8:30.
Mexico guy.
Yeah, it's 8:30. Yeah, so it's right here, right at this entry right here. So right where this wick came down at and grabbed them, that's where it came in. And you already know, right? Because they had orders, and this is all about accumulating contracts and stacking the books, right? Right here at this blue tracer, they had orders going short. You know there's a million traders trying to trade NFP, you know, whatever it may be, and they got pending orders set right below this low. Like, hey, if price comes here, I want to short it. And what did they do? They came right to it, and it looks like, if you look really close, it looks like they didn't touch it, but I guarantee you at that particular time, they widened the spread, and they did tag those orders on. So not only did they tag those orders on, they yanked it right away and came all the way up here because they more than likely had a pending order to go short here, right? And they stop was above the 200. And what did they do? Go right above the 200. So they activated these orders short and stopped them out in 1, 2, 3, 4 candles, right? It's like an hour. I think that's 3 candles. 1, 2, 3. Yeah, 3 candles. In an hour and a half, they stopped them out. And this is what I mean when I say the dirty work of the market makers, right? Like you gotta. Oops, I don't really want this on here, but I'm gonna take this off here. I don't like that that's on there like that. Whatever. I guess I'll fix it later. I don't really want that on there like that. Anyway, they definitely grabbed those orders right here and tagged them out right away. But this what this is all about, is making sure that they're collecting contracts and making that footprint on the chart. And we want to be in after they do all of this, right? Like, don't get me wrong. If I would have seen someone short this today, I would have said that's a great move. Like, I could totally see why you would short that move right here. It's after NFP. We got the double top. You know, everything about this is right. It's just that, you know, not to brag, but most people don't have the TDI with them on their side, right? And this is why I have this TDI. This keeps me out of a lot of bad trades, right? Like I always say, I need my chart and the TDI to agree with each other. Right now, the chart says, hell yeah, go for it. This is a nice short. But my TDI says, oh no, it's not ready yet. It's not ready yet. And my setup comes from them both saying the same thing. One saying yes, one saying no. That's a no trade. They both have to say yes. Right? And as you see, you just check this out. Price has not moved. You've been in this trade for an hour and a half, and it's right at the same spot that you would have got in at, right? Because you would have got in as soon as candle closed. It closed below this whole structure. It took out the last countless hours of work. This was a nice shift candle. Wicks at the top, little to no wicks at the bottom, short. This would be nice. Again, the only thing is there's no reload on here yet. This has to come around like this. It just has to. For me to take it. For me to take it. Otherwise, you get caught up in this, man, that was a good trade. I wonder why it didn't work. Right? You was missing a little piece of the story, which was the TDI. So super close, right? Very, very, very nice move. Right? And then if we can really get into it, I'm going to draw the boxes off, right?
Yeah.
And again, this is just for clarity here, because this is important, because you can almost miss why this is this way if you don't really understand the whole, process of it. So, right, that's the peak, right? Peak, got those two peaks. Right, peak high, peak low, level 1, level 2, right? And I'm just going to draw this on the chart afterwards just to give a little bit more clarity. But we got the peak high. We got the peak low. Can I type this right here? I think so. Oh, not really. It's kind of ugly. All right. Peak low. I'll put it next to it. All right. We got peak high, peak low. Right. And so for here, I'm gonna do 1350 cross, level 1, bounce off 50. Right. So that's what we got there. And then here, right, which is level 2. Right, we got 50. Oh, whoops. 5,200 cross, level 2, MW off 200. Right. This is and will always be the market maker cycle. This just is how it works. All right. So if you check this out. Right, I'm gonna scoot this over just a bit so we can see it all. But if you check this out, now this is super ugly. Don't get me wrong. This is like a ugly M top, because we don't have, price never came back up here to challenge it. It just kind of closed below, right? And if you remember yesterday, I was telling you that if price doesn't come, how can I do this? When we got the M structure, you want it to look like this and come back up and retest it. Right, to go like this. That's an M, right? Because you got the first leg here and the second leg here. It's around the same preference, just about 7 to 10 pips difference. But that's not what we have. It's close, but it's not really, right? It's actually here, down, and then you got this short leg, right? And when that happens, remember, as I mentioned, you need price to close below this part right here to take this. And that's exactly what happened. Right? If you look at this closely, take this off too. If you look at this closely, you can see right here where price closed below this structure. Right? All these candles were close. This one didn't do it, but this candle right here closed below it. And then it went. Right? Had it any candle, if you think about it, like you see this one, it didn't go. This one, it didn't go. But once this closed, then it went. It's because it has to close below this structure right here for this to be a confirmed move. So in this particular case, we don't have an M top, right? Because again, this doesn't have to look like this. It could look like the M top could look like this one does, right? That's what this looks like. It don't have to. The first and the second leg don't have to come to each other like that. This is what we call I'll type it out, but I don't know if I can spell this word, variations of the theme, right? Variations of the theme, right?
Mm-hmm.
So it's going to look different. It can't look the exact same every time because everybody will catch on to it, right? Like, so you can't have that. That's why market makers don't want it to look the same way. Everybody would grab it. They would lose money. So this M top is next to each other, right? Less than 7 to 10 pips. But this on here, this is more of a half a bat. That's why the first leg is all the way up here, and the second leg is all the way down here. But this is still a peak, no matter what. It's still a peak. So I'm gonna scoot this over here just so you can know it's the variation of the theme, right? But from here, what do we have? We got the 1350 cross right here. Right? I can't make this up. Like, it's not like I draw this stuff on the chart. It does it all on its own. I probably right. So we know we're in level 1. So we're looking for a bounce off the 50. Right? There is no bounce off the 50 in this particular move. Right? This came super close, but again, that's not enough. If you really, really look at this, this barely touched it. And I don't mean wicks. I mean body. Body of candle has to touch it, not wicks. Wicks don't count. Right? So from there, right? So we got the peak top, right? I guess I should put this over here. I'm going to just put this over here. But we got our peak top, right? Well, peak high, rather. Right? Then we got our 1350 cross, which is right here. And then from here, so we know we're looking for bounces off the 50, which didn't happen. So you're not worried about bounces off the 50. This is why you can't take this move. You're like, oh, it touched the 50 here. It did. But that don't count after the 5200 has crossed. You're not looking for that anymore. Once the 5200 cross, you're looking for M structures, right? So that's why this doesn't count. That's why a lot of traders took this today. And, you know, depending on if they were scalping or not, maybe they hit it, maybe they didn't. Or maybe they right at break even. one of the three happened. Right? But from here, next move, once again, 5200 cross. You know, you're in level 2. You're looking for M's, W's off the 200. Right? This is how this move goes. This is the cycle. I literally cannot make this up. This is just, it shows up on the chart every day like this. Whether you realize it or not, now that's a separate thing, right? But this is the same exact thing, right? This we got the peak high. This didn't touch this, so there was no 1350 cross level 1 bounce. Like, this never happened, right? Sometimes it'll just go right down and skip level 1 and go right to level 2, but it still wants to touch this no matter what. And that's what, if you look at the TDI, right, you can see that prices market baseline went down, and now it's screaming to go back up. This wants to go back up here so bad that it's doing it. That's why price isn't moving right now. Right? So the next move we're looking for is this. Once again, that M structure going down, and eventually this will do something like this, right? To complete the entire pattern. Right? So we got that peak high, level 1. The next box goes from here to here, right? This is level 2. Right? This is level 1. Sorry. That's level 1. Right in here. Everything from the 1350 cross until the 5200 cross is level 1. Right? And then we got the level 2, which is right here. Once the 5200 crosses, which it just did, right? So from here, let's say it'll be something like this. This will be level 2, right? And then you'll finally have that last level, which would be, actually, I want to scoot this over because it's technically not all the way right. Yeah, so level 2 will look something like that. And then this will be peak low once again, right? We got level 1. This is level 2, right? Because the 5,200 has crossed, right? And then here we'll have this peak low. This is everything. And the faster you can understand this right here, the better it'll be. This is screenshot worthy right here. Like, this is everything. A lot of words on the screen. And again, you need this reload here as well, right? Reload, right? Once all of this happens, the entire cycle is played out. We got our peak high, 1350 cross. So we know we're looking for bounces, but a bounce never happened, right? So there's nothing there. There's no level 1 trade to take here, right? Then the 5,200 cross, which is right where we are now. Now we're looking for M's. It's really M's or W's, but in this case, it's M's because we're going short, right? W's will be long, right? So we're looking for a M off this 200 EMA to go short, and that's your last move. Once it breaks this level, this cycle is over. You want to be looking for this to take this move into the peak low. You don't take this any further than this though, right? At that point, you want to look for it to go, right? Once the W comes in at the bottom, the peak low, you want to do this same thing, but the other way around, right? And it'll look something like that. All over again. The only difference is the direction. Now we're taking longs, right? Peak low, peak high, right? Your sweet spot is right here and right here. Level 1, level 2. You see, I draw the same thing out every day, Amy.
Yeah, yeah. But trading is about repetition, so because you repeat the same thing every day. So
yeah,
if someone is looking for adrenaline, you should choose another. There is adrenaline in execution, of course, but if someone, I don't know, like to be creative every day, I think trading is not for him because you will be repeating the same thing again and again and again and again. Same setup.
Yep. And to be honest, that's how you want it. It's predictable. It makes the moves predictable. You're able to capitalize off of that, right? Because if you can see it in hindsight and you can actually get your skill set to a point where you can see it in foresight, now you can capitalize off these moves. Like me, like you. You can see this happening before it happens, right?
Yeah.
It's that skill set to be able to see something before it happens, bet on it, and be right. Simple as that.
Exactly. Yeah, it's just repeat the same thing again and again and again.
Yep. Every day.
Yeah.
Every day. I walk onto these charts every single day. I literally feel like a NBA player coming onto the court, and I'm about to perform every single day, right? When I do the work behind the scenes, marking up my charts or, replaying, looking at tape, marking up charts, whatever it may be, that's me in the gym practicing, right? And then when the markets are open and I'm in my time frame, right? That's where it's game time. I'm on the court. I'm ready to ball, right? As long as I know where I am. If you was a basketball player, would you try to shoot a shot over a 7-foot person and they right in front of you? No, probably not. Your setup is not there. Your shot is not there. You have no edge right now. But if you were wide open and you like Steph Curry,
I want to take a trade or a scalp. I want to show you execute, but I think we are breaking. Let's be fast. I am waiting for it. So I will execute it right here. Sell.
Let's check it out.
Stop loss here above, and take profit below this area right here. The footprint charts. So actually, I want, for me, those are a big cluster at the low of the. Oh, you cannot see. Sorry. Let me share it again. Share entire screen. Yo. So for me, oops, not yet. Sorry, Michael, to interrupt you.
Oh, no worry. It's totally fine.
So the idea of this trade is we are pushing, like there is big clusters here. We couldn't push higher, and then the delta change, then sellers step in. Here, yes, there is big cluster at the low of the candle, but from this absorption here with 25, with those big clusters and this squeeze, because the volume here is 25K. So I am expecting at least a retracement more deeper into this demand right here. So we had this big cluster here. That's what could hold a little bit. But from what I see right here, I'm expecting this cluster here, there will be more of sell stop, let's say. So we will see if we will break those lows here. It's actually a small scalp. If we will break this low right here, I will see if there is enough momentum, and then I will close the trade. So
nice. On NAS 100, let's check it out. Let me see on my side. What does that look like?
But I was talking yesterday about this pattern a lot, about this squeeze here. Like when you see a trending market, and then you see a big volume candle at the end of the trend, like from here, if I was in the chart and it was during my time zone, I will start to look for sales from this candle right here. So I will be looking for sales from here till this demand at least right here. So
gotcha.
So yeah, so let's see if this trade will go or not. Sorry, Michael.
No, you're fine. I was gonna say I actually agree with that, because go ahead and show your screen again if you don't mind. I just want to point something out. Just want to point something out really quick. Yeah, like check this out, right? I'm sure you see that M top, right? And if you can mark off where that, yep, right there. Go back. The last one. Yeah, right there. Anywhere in here is retesting the zone. Yeah. This to me is short. Right? Yeah, anywhere up in here is a short zone. So it's the same thing. You got the M, you got the break, it's not a huge break. It didn't run too far, but you can only expect so much sometimes. This is that variation of the thing I'm talking about. Right? But you can see them retesting that zone and then run again. So for sure, this definitely looks like this would be a nice quick scalp. Retest that zone short.
And there is also this area right here that we could come take back this high right here, and then drop lower. But for me, based on this big cluster, that I was expecting the, let's say, feel the week this week right here.
Right.
But now, as we can see here, that the price is holding, but still we are inside this candle right here. So we are inside this big wick. You see this wick here? We took this previous wick, come back close bearish. We hold this support right here. We didn't touch the demand. And now let's say we are still inside the wick. So let's see if we will continue we will continue this uptrend and break this supply. For me, I have this supply based on same type of candles. It's let me show it right here. Yeah, it's right here. So this is for me a supply we already respected the supply where you see. So we took this previous week, come back, close bearish, and then we went from here. And then when we came back to it, same thing in this supply right here. And let me go back to the charts. Yeah, here. So you can see that we tap into the supply and then we got the rejection. Let's see. So this trade was actually just a scalp because I know the overall, the overall, let's say the momentum and the trend from Asian session. Like we were trending from the Asian session, and you remember we talked about this pattern a lot yesterday. So from when we start trending from Asian session, like most probably like we will get continuation on the NY session, and that's what we got. We got continuation. So let's see. I think I'm gonna get stopped out on this trade. I'm not sure. So we missed it with the tick, but there is momentum. So let's back to the footprint just to show. So like this big cluster right here. So we didn't feel this is the body of the candle, and this is the wick for me, because I saw the momentum and I saw those big clusters and we didn't move higher. So I wanted, like, let's say to fill this small wick and come back, test this demand area more deeper. But what happened is we hold it. Now we are trying to push, and let's see if we will get a rejection from this wick right here.
Gotcha. Come on now. Yeah, this is prime shorting time right here to me.
Yeah. I got stopped out on this one, but it was a good trade. When you see the footprint, like it was really good trade, because let me go back to the footprint to show it. Like big cluster, high volume, really high volume, and then we couldn't push the price more. We couldn't. Like we test this big cluster here, we try to push, and we created a 442 big cluster on the top, and then as you can see, the sellers start to enter. So for me, this trade is really good, even though I have my demand area right here. But for me, I always look like to what the price did before coming to my area. So for me, when I see this on the footprint, on the delta, this demand here, I will be a little bit more careful to take buys from this area right here, unless I saw something good, because it's important to have the area of interest, your area of interest. But you see, so now we are reacting to this candle right here. So we took this week high, and we will come back, take the low after they stop me out.
Yeah, this seemed like the buy right. I mean, the short right here.
Yeah. For sure. There is a short, and it take me out just with let's see, 1 point.
Yeah.
Nasty
work.
2.5 points. But still, like it was a really good setup, like really good setup. The context of it is really good, and just you see the absorption. That's what we call the absorption. So those buyers got absorbed. Go because normally when you see big clusters, so if we come back a little bit here, you see, for example, here 160. This is the biggest 175. This is the biggest clusters on this candle. What happened next is we got continuation. So until now, everything is good. Again, here, 367. What I want to see is continuation. What we got continuation. Same thing here. 285, big cluster. What happened next? We got continuation. And when we arrive here, 360, okay, at the bottom of the candle, 483, big cluster, and then some big clusters here. What's happened? We tested. Okay, now we are pushing up. It's good. But when we got this 442 cluster at the top, this was sort of, and after we got red candle, this is sort of the buyers start to get absorbed. The second confirmation is we had a 25 25,556 on volume. So this is a big volume. So big volume, and we are trending, and there is a big candle. This is a lot of confirmation. This invitation of buyers. There is a lot of confirmation to it, and sadly now the price is going to my.
Yeah, that sucks.
Yeah,
that sucks. And it's one of those things where it's like, were you wrong? Yeah, you were wrong because you lost, but you actually were wrong, right? Because you predicted this exact thing. That's the part that sucks.
Yeah,
and look at this. This candle closed below. It took below all of that work. Yep. This is the short right here. This is actually a second short opportunity.
Yeah. There is, but now because like it's Friday, so
yeah.
Also
I'm gonna say, but don't forget about the NFP Friday.
Yeah. So it could you could see like come back again, take this week before we go down. Like we could see that. But look at the size of the wicks. Like it's like we took this previous week with big wick, hold the support, try to push again, big wick here. So I want to see like on this 5 minute candle, if my analysis was correct, I want to see like taking those lows here at least.
Right.
And normally if let's go back again to the footprints. If these things here didn't happen, like I didn't see this big absorption and big volume, I will try to take buys from this demand. This is a demand for me. You see this candle here? We took this previous week with this week here and we closed green, we got continuation. So for me, like, yes, it's a good demand, but I want to see something here, some good absorption, some big clusters, some buyers step in to take buys from here. Otherwise, I think this is the sign of reversal of this at least to come somewhere here. And
right.
let's see if it will happen or not. You want to take back, Michael, or should I show just the trades I took today?
What time is it? Yeah, I can finish up. You can take it for the rest.
Yeah.
I didn't have too much more anyway.
Yeah.
Let's see. But no, definitely good. I see exactly what you were doing and what you were saying. I totally agree. It's just that Friday, the NFP Friday, it'll get you. This is insane.
Yeah, we took the trade for the viewers, but it went wrong. NFP Friday, listen to Michael, guys. Listen to.
So check this out, though. Since we already here, I'll talk about this before, right? So obviously, I can't say this is totally going to go down, but just look at this. We got this is the outside structure, right? This is outside the band, right? This is what I guess divergent is what some traders would call this. When you're looking at this, you see this move here, right? This is outside the band, which is this is the highest point. Now actually I can use this to do it, right? So here we have it like this, right? But on the chart, we have it like this, right? And not to mention, look at the TDI for me, the market baseline. Look at this going down. This wants to go down so bad, it just hasn't yet. That's really it. It just hasn't yet. Like again, even when we zoom all the way into this, we got this nice double top. Yeah, I'll be honest. I will be short anywhere within here. The only difference is, and you're a scalper, so it's slightly different, right? But I'll be looking for a move similar to this. So we got to have it at least a 1-for-1. So yeah, something similar to this. This will make sense.
Yeah.
If I also take this and it was like, oh, take a trade right now, I would take this.
This is perfect.
My stop would be above this swing point because I don't think that they would come up. Yeah. Yeah, I would take it above this, and then my target would be this 50 EMA right here, which I definitely think that they would take.
Yeah,
right?
I think
just like this. This has everything else.
You will get a zero drawdown with this entry.
Yep.
Sniper.
I won't be surprised if this went right to it. Yeah. And,
Yeah,
and reason being is everything I already mentioned, right? But at the same time, you got this double top. And again, this was really the highest point. I'll call this outside structure. When the price comes outside of the band like this, and then wants to come back in, whatever this highest point is, like from here, right? This is the outside structure. But the fact that it went up once, 2, 3 times again, and this is going down, down. This is I highly doubt that it comes above this right here, right? Like I highly, highly, highly doubt that. I can't say it can't because it definitely can, but you know, NFP Friday once again. But if I was forced to, this would be the exact entry right here is to take this. And again, this is NFP Friday, so I'm not taking this, but I'm just saying. And look at it, it's flipping back and forth, back and forth. It'll probably make a huge, huge red candle and close below all of this, right? Let's see what this will do. If this closes below all of this, right?
When the price is resting, like what we are seeing now, like just small like moves, like between a small, like in a range, like just a prepare for some big movements. And especially when you are seeing the volume and you see those big clusters and still no reaction. Like I don't know if it's Friday because I don't trade at this time, but some big movements could happen. Like, but we will see.
No, I definitely think it's good this Friday for sure. I don't know why it's doing this.
Yeah.
But yeah, it's because it's Friday. This flicking back and forth, back and forth, back and forth. Nah, it's green, red, red, green, green, red. It's too much. It's way too much. But we'll see. Let's leave this here and we'll see what it does.
Okay.
But cool. Just coming back to GU really quick, and I'll just go over GJ and I'll hand it over to you. Right. So yeah, we just talked about a lot of this stuff. Yeah, I really just wanted to point out, like, you know, the cycle of how everything goes, right? Like it'll always, always, always be just like this. There's never going to be a time that you don't see me trading within these parameters, whether it's level 1 or level 2. I'm staying away from the peak, staying away from the low. That's just how it works. I'm making the money in the middle, whether it's short here and short here or long here and long here. But away from the peak is the main thing. Because I like to think of it as there's trap volume in this area, right? So once this double bottom is set in and it breaks this, they really don't want to come back below this price here, right? Because there's traders trapped there, and they really don't want to come below this price here. Because again, there's traders trapped there. All the money that they built in for themselves is sets right in here. So we just want to, we want to trade away from them with that. Hey, why are they doing that? Trading view is so weird sometimes. I don't want to take away all the drones, guys. Just this one. That's so funny. So yeah, last little screenshot. If you guys want to take a screenshot of this is, I know it's a lot on here, but it's broken down very, very well. If you guys want more info on how to break this down fully, definitely book us in the Discord, right? We're both available, so book us in there. But yeah, give it 5 more seconds on this.
No,
again, guys, peak high, 1350 cross level 1, right? 5200 cross level 2 into peak low. And that's it. You're taking this structure down and up. It looks just like this, right? You can even take this around, right? So you can do that, move this over here, right? Level 1, you can move this over here for level 2. It's the same thing. This is the cycle that the market plays in. So when you see that break and retest, this is the break and retest, break and retest. You can only do it twice though, right? So don't take it further than that. All right, going once, going twice, delete it. All right. And let's go ahead and get to GJ. GJ has been super interesting, to say the least. See, for me, GJ has not done anything just yet, like I said yesterday. Well, it has, but I can't take this going even longer, right? Because we got the 5,200 cross here, right? I'm not going to mark up this whole thing again, but 5,200 cross here. Does this count right here? Yes, it does. Because again, I said, I don't want wicks in here. I want some body. And we got two bodies of the candle in here. Yesterday, that this was the trade. When we talk about the M or the half a bat off the 200 EMA, this is the move right here. You took this move right here. Close, stop loss below all of this. And you got to go for at least a 1-for-1 minimum. Right? So you got your money here. This thing went all the way to really a 1-for-2. Now, would you have taken all that? Probably not. You would have ended up closing it right here, right? On this candle, this red candle that closed where? Below the 13 EMA. And that's what the chart is telling you. But simultaneously, you have what? The RSI line and the signal line crossing below the market baseline. It's a great time to get out of the trade at this point. You got enough of it, you end up getting what? 1 for 1.5. You put up $1,000, you made $1,500, $1,540. That's great. So that's the move, right? But as I always said, after, right, we got the W structure, low, peak, high, right? Boom, boom, boom. After this part, because this is where we are in the cycle, mind you, this is where the 5,200 crossed. I'm not taking this any longer at this point. So I'm not interested in GJ, I'm sorry, no longer at this point. What needs to happen is, at this point, GJ needs to 1350 cross. We got our funny M top. Needs to come down, break this, hit, and go short. I'm interested in the move here going short, but not going long anymore. The long side is over with. It's over with. Right? So just to continue this pattern, right? Going down, come back up, down, come back up, down, W bottom, right? Where we are right now, I'm only interested in this right here. This move here is the same thing as this move here, right? Now, if it sets up or not, that's a whole different story. I'm just saying this is where I want to enter into it. If I don't get that move, I want to get this next move right here. That's it. That's it. That's all. That's all. That's it. Nothing else to it. So for me, GJ is done. Right. So I'm not interested in it just yet. Maybe next week. And I just want to go to Bitcoin really quick on the daily, right? Because this thing has been going up ever since I said that. Mind you, I didn't want to hold this trade into the weekend, right? But literally keep in mind that I took this trade right here. Remember, I kept saying for, I think, 2 weeks maybe, if this closes above the 50, it's long, right? And it's been up ever since, right? Long position here. Your stops will go below this lowest swing point, right? And your TP really will be the highs because you think we'll take out the highs, but that's very advantageous. But either way, you up big right now, right? Like you risk so far, you will be up 0.77%, right? So almost a full percent. This is actually about to take out. I said move stop loss to break even. That's if it happened faster, but I got in this a long time ago. I got in this on April 21st. That was 12 days ago. I would not hold this trade for not even day to day, but for 2 weekends in a row. That's a for me. That's way beyond my swing purview. Right, but yeah, not all time highs, but this trade has been up ever since that you would have actually got into this, just following the same market maker cycle, guys, that I've been pointing out since forever. All right, that's it, Aymane.
It was a good call. I remember like the trade you took on Bitcoin. It was a good call. Good one.
Yes.
So yeah, so let's show back the screen. Yeah, let's go over, let's say, the plan for this day and which trades I took. Again, it's just on a couple of evals. It's not on my account. So first thing I saw when we were here, when the NY session opened. So we were somewhere here between this candle and this candle. So what I was seeing, for me, as you know, I'm open to both direction, but because you should not close yourself and okay, we will trend higher, we will go higher. Of course, like if you get opportunities for a retracements with good confirmations, why not? Just at least this is how this is how I think. So first thing I saw is we are opening on a supply. This supply here took this previous week, closed bearish. We got the continuation. So the session opened in a supply, and I will never buy from a supply, even though like I know that from the Asian session, and I was talking about this pattern a lot, it can help you also to identify the direction on the NY session. I say 70% of the time, in my opinion, like when we are trending from the Asian session, so we are trending from the Asian session, like the NY and London session, the NY session, most of the time we get continuation. So this is what I saw the first thing. And when I start to draw my levels and my zones, they were too far. Of course, there is nothing far with the markets. It can be after 15, 20 minutes, you can see the prices somewhere here, from here to here.
Right.
but still, for me, like I said, this is how I was thinking. This is the thinking process that I had when I was trading. So the market is opening here. It's open in a supply. The direction for the day is bullish. Why? Because from the Asian session we are trending higher. This is how I was thinking. When I switched to the 1 hour, what I found big candle. Let's say on this trend here, this is the biggest candle. So for me, I said, or we will make a double top here on the 5 minutes, etc., and then we will drop lower and we will reverse all of this move right here, because we saw so many times that on NFP, when NFP news is released, you see like a push to the upside, and after the NY session open, we see a reversal, like totally like came back to like to the levels where the NFP news were released.
Right.
So my thought process, I said, okay, we are in a supply. Let's wait. If there is a couple of confirmation to take sells also. If I want to take buys, I will take it from here or from here, or if there will be any fresh demand area. For me, later I will explain it. Later we got a trade, but I was not in front of my laptop because I finished. So we open somewhere here. If we go to the 5 minutes, just to show, this is 15 minutes. We are in a supply. So on the 5 minutes, as you can see, this is the open, 5 minutes after the open. So we took this previous week and closed bearish. Of course, it's not enough. We are in a 15 minutes supply. And when I switched to the 30 minutes, we had sort of sign of reversal. So we had this candle here, big candle to the upside, and we took this week, with this candle right here. Let's delete this. And then we close bearish. The next candle, we test the 50% of this week and we start pushing lower. And it's here when I switch to the 5 minutes and I saw this, let's entry candle. This is my entry candle. Took this previous week, closed bearish, but we still holding this wick right here. But for me, because we are in a 15-minute supply plus this 30-minute candle is showing reversal, I said at least I will take a couple of scalps with this short-term direction, with this. Just my, this is how I call it. For me, when we are in a, like when the momentum is pushing lower on the 5 minutes, 15 minutes, for me, the short-term direction is bearish. But overall, like direction is for the day is bullish because of what, like I said, Asian session we are trending, London session we are trending. So here I start to think of sell. Let me show, because I took a couple of scalp and then I took a couple of, and then once, let me, where is it? Is it that one? I don't know. Is it this? Yeah, I think it's it. So I took one trade here. Let me. So the idea, I think now it's clear. Let's show you just the execution. So this first trade was more the scalping strategy I am using. You can see here, this is a 3-minute candle, and the 5 minute was also the same.
So right here, right, is what I always say when I say it's not an M, because the second leg didn't go as high as the first leg. But once it closes below that structure right there at the bottom, like that little support, scroll down a little bit. Go to where the other candles are.
This here?
No, go to the right where you just were. Yep. So go back 2 candles. Go back 2 candles. Yep, right there. Once you see that big bearish candle broke below that, short.
Yeah.
All day. The next candle after that huge, short all day. That pattern right there is short.
Okay. Actually, it's like the different, let's say, system, but same way of.
Yeah.
Yeah, it's good. Like, as you know, this is the scalping, let's say, strategy I am using to scalp a couple of points. You can see that we are in a supply, 15-minute supply. The 30 minutes, it shows reversal. And here on the 3 minutes, we took this previous week, come back, close bearish. Next candle, you can see that we had it here. We took this previous week here. This is 30-second. We close bearish. First reflection is this is a big candle, so I need to at least a retracement. But when we got the retracement, like we got a wick, so it's like sellers are pushing.
Yeah.
So I took a sell. My target was here. Like I thought like we will reverse, and then I said just something realistic, and then this was the scalp. Like you will see me like after a couple of maybe $300, I took profit, and then I took again, and then I don't know, and then I took again, and then I closed the trade here. So here this was the first trade, and then I just here. Okay, so this trade again similar. I took the retest of the same area, and my stop loss I put it above because the ATR was low. I was up for the day, and I put it above this candle right here that took this previous week, close bearish. Just I want to show just the footprint to understand. I add more because I finished with 5, I think. Where I show the footprint, it's somewhere here. Yep, here. Oops, let's go back a little bit. Here I took profit. I will show why. Just 1 second. So, yes, 1, 2, 3 show the footprint. Here it is. So this is how the delta chart was looking. So you can see here that we had like big cluster. This is the 5-minute candle. So that took this previous wicks and come back close bearish, and we had like some big clusters here. So for me, like this is the last let's say obstacle that the sellers can protect, because if we broke, we will go to the high, the swing high. So for me, I enter sell based on this candle, based on the 15 minutes, based on the 30 minutes, which give us the reversal, like I showed here. You can see this candle right here. So we had enough confirmation at least to take those lows here. So normally this trade was, the plan was to take the lows, but I took early profit. Why? Because you can see here like a big minus 191. You can see here like on the wick of this green candle, like here, you can see minus 191, which was a big cluster. And I don't want, let's say, in a Friday, I am up for on the first trade. I want to secure at least, even though like I had a feeling like we will break at least this low, because like we had, you can see here, like we had big cluster at the top of the candle, and we were pushing, like the momentum was pushing. So here I took up some profits, and then I decided to move break even, and then I said no, not break even, let's put it above this. And it's funny because it was, I think, yep, here it was, this is the, it was couple of I think 1 point or less, 1 point or less to hit the break even. And it was a news, I didn't know that we had a news at 10.
Oh man, you lucked up.
Yeah. So and then the plan was to take those lows right here, and then after that I close. You can see here that I closed the trade somewhere here. So that was the trade for me. Let's go back just to see what the NQ did. Yeah, I think it's pushing. So the analysis were wrong. The expectation were wrong.
Yep. We got smashed, and that's that Friday for you.
Yeah. Like for me, I will take this setup any day if I see it on my time zone, like on my time. This setup right here, I will take it any time, any day. Like big volume, big clusters. And this is what we talked about yesterday, if you remember, Michael, why trading is tough. Because it's the same setup. Sometimes it hits your stop, sometimes take profit, and you have to repeat the same thing again and again and again.
And your brain tells you not to do that again because it didn't work last time. It's like, no. Don't worry about it didn't work last time. Out of the last 100 times, how many times did it work? Oh, well, out of the last 100 times it worked 70 times. That's great to me. That's great information to know. I don't care what happened the last time, because that's not a large enough, as they call it, sample size. I need something bigger than that.
Sample,
right?
Yeah.
People make mistakes. That's like Steph Curry having a bad game. If he was wide open from the three, would you expect him to make it? Yeah, I would. But if he missed, would you say he's a bad shooter? Of course not. That would be absurd to say if he missed one shot and he's
yeah, and this is the right mindset that the trader should have.
Yeah.
Like you said, Michael, like you should think with sample. It's a sample.
Yeah.
You should, let's say, judge yourself on samples, like 30 trades, 40 trades, and then just. But the thing is, and even me, like I was doing it, is like I couldn't hold until 40, 50, 60 trade, or because sometimes if you are swing and I am telling you 50 trades, maybe it's 3 months or 4 months or more. But this is the right way to do things. You have to, let's say, to based your like start to switch your thinking from one trade or 1 day or 1 week, losing week or losing day, to a sample like 20 trades, 30 trades, 40 trades, and then sit with yourself and then say, okay, Now I should think about something.
And it's hard to do that, to be totally honest. Like, it's really, really, really hard to do that. Because once again, you're using a totally separate set of skills and a totally different measuring stick, right? Like, I guess if someone was to say, like, I don't know, like, how tall is this? And you would think, right, the thing to bring is like some measuring tape to see how tall or long something is. And it's like, oh, well, that makes sense. That makes total sense, because that's what you would typically do. And if someone was to bring, I don't know, a hammer, it's like you brought the wrong tool to try to measure this. You don't measure with a hammer. You literally brought the wrong tool, right? Like, or you brought a weighing thing. You bought a scale. It's like, dude, I'm not trying to weigh something. I'm trying to measure something, right? Like, right idea, but wrong tool, right? Like, you don't bring a hammer or a scale. I need measuring tape to measure this. And sometimes in trade, and that's logical in the real world, right? And it's simple, it's clear cut, it's black and white. But in trading, it's not so much, right? Like, it's kind of hard to measure things the way, because you're not used to measuring with those tools in that sense, right? Like, if someone normally you're like, all right, 1, 2, 3 strikes, you're out. It's like, dude, that's baseball. That's not trading. You're using the wrong measuring stick right now to calculate or quantify if that is working for you or not, right? Like, you need to take more swings, right, or more shots to determine if that's right or not. No one, you can't take 10 trades, right? Like, we get traders who like, oh, I had a good 2 weeks, I finally figured it out. I hate to be the bearer of bad news, but you haven't figured it out.
In my opinion, like, what's most hold trader to not think this way of a sample of size, or like what we are talking now, is they are too attached. I think there is the attachments, and that's why I told myself before, and I always tell my friend and student that to get a job, you should get a job. It will help you. It will help you. Like, when you will get a job, and you have, let's say, an income is entering,
right?
You will not less think, but you will let emotions. You are more detached emotionally, because the rent is paid, the electricity is paid. And I think we have something. What is your anticipation on GBP GPY?
What is it?
This is for you, Michael.
On GJ. Okay, so might be a little late to the party today. Let me show GJ again. I think we went over GJ a little bit earlier today. But let's go over it again for you really quick. So cool. GJ. Do we mark this up already? Oh, it's on the daily. Okay, so let's zoom out. Sweet. So GJ, just to kind of give you some context here, right? So GJ has actually already completed its what I would call a cycle, right? Reason being is we have this 5,200 cross here, right? Which means it's in level 2, right? So when we have this 5,200 cross, that means we're in level 2, right? And that means we're looking for M's or W's off the 200 EMA, which we already had right here, right? This is your entry candle right here, going long, right? Let's kind of zoom in a bit. Oh, sorry, one candle over here, actually. Boom. Oh, right there. Once this candle closed, this shift candle, and it's called a shift candle. Why? Because there's little to no wicks on. Let me scoot it over so you can see it. Right, but there's little to no wicks. Little wicks on both sides. It's mainly body. It shifted this entire zone and it closed above this structure. This was your go sign right here. Now, if you was really good, right, they had a nice little pullback. Oh, actually, it didn't have a pullback. Sorry. That's the Asian box. But either way, this was your candle, your entry candle on this particular candle right here, this long one. And then you should have went long right here, right? Your stops were below this price point here, right? So you want to put below the last swing right here, because this is where it would typically go. And this is a safe stop. A riskier stop would be right here, right? Just below that shift candle. Either one, that's totally up to you to really do. But as long as you have a 1-for-1, you're good to go. And your 1-for-1 came in around right here, right? So that was the move. So for me, there are no more longs on this trade. I'm looking for shorts. And that short can't happen until some things happen, which would be, you see we got our M top, pretty much. I needed to break this area, which is done. And I need to retest this area, which it has not done, right? This is the market maker cycle here that you want to kind of pay attention to. If you start checking this out on a weekly, daily basis, rather, you'll notice I will always bring this up. This looks the exact same, right, as it always does. Right here is when you'll see the 1350 cross. When I say 1350, that's the 13 and the 50 EMA, right? 1350 EMA cross, right? I know I'm in level 1. I'm looking for bounces off the 50 EMA, right? So this is one move that you can take, and the second move. On the second move, you're looking for the 50 and the 200 EMA cross, right? You know you're in level 2, and you're looking for M's or W's off the 200 EMA, right? So with that being said, we're right here. Has this the red one is a 13 EMA, the blue one is the 15 EMA, right? That has not happened yet, as you can see. So we're looking for a move to happen like this, in essence. Whoops. We want to see this cross. We want to see this come down, retest this area, and then go short, right? That would be your, let me scoot this over rather. That would be your level 1 move, right? And then from there, we want to see this 50 and this 200 EMA cross, right? Something like this, right? And then we want to see price make this M off the 200 going short. And that would be your level 2 move, right? So same cycle, you want to be taking it here or here in this cycle, right? It doesn't really matter which one you take, but again, the bounce comes off this move here and the M pattern comes off this move here. Only these 2 moves, right? This peak high you're not interested in, which would be this move here. Don't try to take this. This will end up stopping you out in the long run, right? And then you got this W structure going low. You want to stay away from that move too, right? Stay away from both of these. Trust me, it'll save you a lot of money. Just stay away from these 2, right? So that is the markup on GJ, right? This is what you want to look at. Taking one of these bounces once the 1350 cross, or taking the M off the 200 once the 5200 EMA crosses. All right, and that is it. That is time. Willie, we're here every day, Monday through Friday. Check us out. Obviously, everyone's going to be a little bit different in their approach, but that is my approach to GJ. And yeah, just check us out. We're here. You can also join the Discord if you haven't already. You can book us kind of get like a one-on-one insight as well. But other than that, guys, that is time.
Coach Michael, it was a great
Aymane,
session.
it's always good. Yes, it's always good to kick it with you.
Thank you. Thank you.
Yes.
Have a great weekend, guys.
Of course.
Jannie, have a
Yeah,
great
take
weekend.
it easy. Have a great weekend. I'll catch you on Monday. All right, Robert. All right, Willie. You guys take it easy.